All right, boys and girls, welcome to another version of Sunday Sync. Today's March 16th, 2025, and we've got a quorum here. I think we had about six people or so. So we just usually open it up. I know we got a few new people here, so we usually just take it wherever the crowd or whatever the group wants where to take it. Sorry, I'm a little sick, so I'm kind of discombobulated to say the least. So anybody have any topics or paths we want to go down?
Yeah, if nobody asks any question, I want to start with some question. So I'm new here. I like to invest somewhere in uh, probably I'm looking at I live in Bay Area, San Francisco Bay Area. I'm thinking of investing closer to where I live right now. I already have a one duplex property in Texas, so that I purchased a couple of years back. So that's been going well, but at the same time, I like to invest somewhere closer. So any suggestions? I really welcome.
I'm partial to Arizona. I'm right next. I mean, I live in Oregon, but I'm investing in Arizona right next door to you there.
Oh, okay.
A little closer than Texas, but if you've already got people and teams and whatnot in Texas, then economies of scale. I'm a big fan of that.
Yeah.
Hey, Jared, who do we have on today?
We've
We got,
got you, Charles, and Robbie, Robert, Jason, Troy, and Wayne.
okay, guys, we're meeting with a realtor in like 10 or 15 minutes.
Okay.
I'm going to go a deal a sixplex that we looked at this morning, like outside, but I've got the paperwork on it. And so everybody get ready to like screenshot or however you're going to look at this because there's 3 pages here. The drive-by video is on our YouTube channel at it's uploading is what my wife just told me at Pair Rents. So we're gonna switch the video around.
Wow, real time deal, huh? That's cool.
Yeah. Yeah. See what we can do. So the address is 328 and 340 Valdez Street, Creve Coeur, Illinois. Asking price, I believe, is 240 or 249, 242. They work at 262. This is two separate properties sold together. Can you guys see?
Yeah, yeah.
Okay. Sold together. Taxes 5822. Revenues. Let me switch pages here. Sorry about the flipping around.
It's okay.
We're gonna go
I'm
to.
already sick. Can't make me any more sick.
Sorry, guys. I'm sorry. We're going to. So this has got actual tenant names on it. Okay. 100% occupied. 6 units produce 3615. We've got one that is in arrears. So 5 1 bedrooms, 1 2 bedroom.
Let me guess. The arrears one's a 2 bedroom
How'd you guess that?
because of family. It's just the way it goes.
Okay. Okay. Pair Rents is where the video stuff's gonna come by. If I did this, which I gotta see what HUD and everything's like in the area. So there's multifamily in the area. It's always been a transitional community. My wife, which yep, I did better Chinese. We're outside of Kroger's in Washington. I'm trying to figure out how little I can put down and what the returns would be and how long I could live with the deal.
Yeah, I
So
would reach out to I know you're probably because it's a sixplex, you're looking at multifamily debt, but you might want to reach out to Convoy Home Loans. I think they do up to 8 or maybe 10 units
okay.
for 30-year fixed rate debt.
How's Mr. Jim? What's he doing?
He's on his iPhone on his headset.
I see.
He's also trying to make us sick.
I see. I'm sorry, guys.
I'm messing with you, man.
Well, I'm
Ironically,
on my way to a ORAT local meetup. We got like, I think 7 to 9 people meeting up in Campbell.
Okay.
Nice.
So
As we drove the area, we found a off-market single family with a garage on a lot next to it. I put a phone call in. I haven't heard anything back. We looked at 3 other homes in the area, one on market, 2 not yet, and none of those really trip my trigger quite
So
bad.
hey, on your, I mean, you're throwing us out here. I know you got to get to your realtor, but so most of those are single units, right? So you know the area. I don't know the Illinois market, but to me, that is, you're either going to be renting to probably younger people or middle-aged people with no relationship, and then as Zuber will say, that's one relationship away from a turnover.
Yep.
Then on the other side, if you rent to some of the older folks, then they'll stay a long time. So it's a double-edged sword. So you're prepared for the turnover you potentially have, or you're going to target well, you got to get the house first, but the property first. But just, I don't know if you dealt with single family or single units before.
No, I
Yeah.
have.
That's all I do, by the way. I mean, not your way. I do co-living in a single family, so it's a little different. So I'm prepared for the turnover. I just wanted to, throw that out there.
So the realtor I'm meeting with is a local gal. She's got like 65 commercial and residential properties. Fairly aggressive. And I just kind of feed off her. This property's managed by Core 3, which is one of the better property management in the area. And we'll kind of see how it goes. I was just kind of looking for feedback. Everybody's hunting for deals. And I'm like, I see deals here quite a bit. I just need to evaluate if they're any good or not. Because, well, you know what it's like, Jared. You got money in the bank, and is it better just to leave it there?
It's a good problem to have. Anybody on the bridge or a bridge?
Yep.
Sorry, guys. I work at Intel, and I say we call them bridges. Anybody on the phone or the Zoom call have some feedback on the 6-unit, 1 unit for 5 units, or single unit? The other one's a 2-unit in Illinois for Charles. Any feedback?
Is it a true multifamily property? It sounds like to me it's multiple properties. Are they triplex, singleplex? I mean, like duplex. What's the scenario again on those?
They are 2 3-plexes side by side, built at entry or ground level. So 1 step up, little flats.
Are they zoned multifamily?
Yes.
Or triplex? Okay, that's a good thing. So when it comes to getting financing on it, you might be able to do it through that would be considered a commercial property, I think. So that opens a lot of doors. So you could do DSCR, you could do, or you could have them separated out and do single family evaluation and stuff like that. You say that the realtor owns a bunch of commercial property too?
Yes, she owns commercial. She owns commercial, and so it's not the realtor on the deal. The realtor on the deal is the one we looked at a duplex with this morning. It's Tracy, a high school friend of Carrie. We're meeting with Amber, and I'm kind of going to run it past her. Now, these 2 realtors are friends, like friends. So I want to make sure I don't step on toes, but I'm still learning. And it looks to me like $250,000 is going to buy about $40,000 a return without a lot of headache outside the normal tenant crap.
And you're going to get that no matter what property you get into.
Yep.
But I would ask her why she wouldn't buy that property.
Okay.
Get a lot. She's very familiar with the market. She's very tapped in with what she does. She understands like the renter pool in that area. Ask her like what you think would be the hardest thing in terms of lease in that area. What is the biggest upside for that property in that area? Is it value add? Is it actually getting those rented out with like Section 8? She might be more intimately aware of the upside in that. and then just her opinion on that. And you're saying that both the showing agent and your agent are friends. You're saying?
Yes. So the listing agent, which she hasn't actually, I just asked her to bring the paperwork for the one we looked at earlier.
How long has the property been on market?
I think 60 days. Let me check.
That's not too bad.
Yeah, it's long enough to have a price drop.
Yeah, obviously, I would ask her. I
One
would ask her what's wrong with the property. Have her ask what's wrong with the property. Why isn't it not sold already?
Okay.
I mean, that's a pretty good question for them to be. Because I mean, if they've had a bunch of tire kickers, it's either price, or there could be some deferred maintenance that's really kind of an issue with it. Especially you got a sixplex for that value. What are those sixplexes going, or what do you know what your cost per unit is for the one bedrooms in that area? Like one bedrooms could be going for like 80,000 a unit. Having an idea of what you think in terms of those prices might help you evaluate it.
Right. And I'm all sorts of cheap on that end of that scale. So
just look at what your comparables are in that area if you can for the last 6 months. I wouldn't push it out too much more than a year unless you absolutely have to, if there's not a big pool to draw from.
There's a sixplex that Tracy also sold, or has pending, for 275, like the next town south. So within
how far away is that?
15 miles.
Okay, that's a pretty significant distance, but that could be a regional thing, because sometimes when you go from town to town, there's just a big difference in terms of pricing of the values of the homes. They can jump up $30,000 easily.
Right. Yeah, I totally get that. I don't know multifamily at all. So
I think it's a good investment. I would definitely try to see what you can do to get into it. I mean, if it's something that you think, if market price is really like 250, I would try to get it out the door if you could for like 200, because then you have that cushion.
Yep. Okay.
And then you can get your cash flow, because that's where you make a big difference in terms of being able to deal with lease ups. I'm in the middle of a lease up right now at my duplex in Kansas City, and the one thing I'm thankful for is the fact that I'm getting roughly about $900 a month in cash flow between the two units. But having that is giving me a bit of cushion in terms of lease up. I had to go through and do some recarpeting in the unit and have some work done to the drywall, because the tenant was before had a couple that was living in there that had some anger management issues.
Oh,
so
yeah.
There was some damage to the property. So it's taken me longer to get it turned, especially leasing from it or managing from a distance. It gives you that reserve, the ability to build up reserves to be able to withstand some of your turnover.
So the other thing I've been looking at is what single family low end has been sold for in the last 2 years or 3 years. And I think I could get rentable stuff for between $30,000 and $50,000 a house. I don't know how long they'd stay, but I bet their year stays. So, but things have changed. Financing has changed too. So
I think about having a 1-1. Usually the one bedroom, one bath, they lease pretty quickly, because there's usually not a lot of them out there. So that's usually advantageous, because usually you have like a 2 bedroom to a 3 bedroom unit. They get more rent out of them, but the pool is between you and renting a house, versus a 1 bedroom, one bath is usually someone who just wants to live on their own, and you get a pretty diverse class of a diverse group of people that are looking to rent. It could be young, it could be old, it could be whatever, someone who's just needing a space for themselves and they don't have a desire to have roommates or anything like that. So those units do lease up pretty quickly.
okay. Some of them have been filled for several years.
That's a good thing.
In fact,
I would look at the lease agreements that they have too and see what they're locked in at. That's a big deal, because when it comes to your DSCR, if they're well below market rents, that could be an issue.
okay.
Yeah, I would strongly consider though reaching out to Convoy and give them your SREO and get your file started with them, because they'll do 30-year fixed rate debt up to I think at 8 or 10 plex if you're interested in that.
There's a lot lenders between Velocity and then Matt as well, and Combine. All those guys, they all have some pretty good products. But
Velocity is a point higher. I mean, Velocity is more expensive. Put it that way. They don't do a lot of background check though. They're pretty loosey goose. They go for it, but they're more expensive. In my research, I've checked into them, and they're a little bit more expensive.
That's because they're almost next to just a private money lender, basically, is what they're doing, because they give you the option of having a ratio loan, so you could have an owner carry, so you could basically get into it for little to next to get in, so like 10% down or whatever works for you, as long as the seller is willing to do a seller carry.
Yeah,
that's what Velocity does, and with that being said, though, you're going to get a little bit higher interest rate. Yeah. They're pretty much almost being like a private money lender.
Yep.
No, they had a pretty good offer, full price, for some sort of seller carry, and the seller wasn't interested in it. And the seller's not, from what I'm hearing, isn't in a position where they have to sell. But I'm just curious. It looks like there's enough meat on the bone. I'm worried about what 5 years look like if I've got an arm on it. So anyway, I think
if they're not willing to take a seller carry on it, and that's pretty much what they're getting in terms of offers, I would press hard to see what they're willing to take for cash down.
That means
so if you're like on it, I would get some credits on it. I would offer like 190, 200 and say, well, hey, it's a significant price reduction. But the thing is you're coming in with capital lending. You're coming in with cash buy basically at that point.
Okay. Yeah, I'll see what I can do, because 25% down is really not a problem. I just want to make sure it's a good spend, and it's a spot that I want to be in, because I am brand new. So, but it's there. And Jared, if you're still there, I'll send you some of this stuff so you got an idea what I'm doing.
Yeah. Well, you're not brand new. You manage properties, don't you? You got one or two, don't you?
We got properties, but we got kids. I mean, I'm pretty much brand new.
Okay.
By the time we go live with stuff, we're gonna have a big wad that we're rolling at once, type of thing. That duplex that we bought last month won't be ready for probably till midsummer. I think I'm gonna keep the property we call the ranch occupied by the kids, with maybe a tenant in the outbuildings. I don't know. Maybe not for 2 years. It's a school issue with the son, trying to maintain eligibility in a school district. We still got two more to do something with, and then the ranch is probably valued at just shy of $250,000. I owe 80,000 on it, so I want to make sure that's financeable, to pull some money out of that and do it.
What's your hurry? Why are you trying to go balls to the wall?
10 years and out, brother.
I know, but I mean, it would make. I mean, this is something I had to learn. This is, I don't know, judge me if you will, or take this, leave it. But talking to all these guys that are millionaires, like Dion, and I guess he's a millionaire, Dion, and Lumberjack Landlord, and all these guys, and Zuber and whatnot, they all told me to slow the hell down, because I was doing what you were doing. I was going to go gangbusters, and I did. I slowed down for 4 months. And then I was like, all right, go. But I mean, at that point, I slowed down. Now, the one that did it for me was Coach Carson. I'll just say it like this for anybody listening who's, like, Charles has got some money, I've got some money, and we want to go 90 miles an hour. But he said it like this. He says, look, if you go out and buy one property, find out all your mistakes on that one, then you can avoid those mistakes. If you go out and buy 10 properties or multiple properties, you're going to pay that mistake over and over and over again. So if you go out and learn those lessons with one property, you avoid that cost and mistakes and time by going gangbusters. And another person that will tell you the same thing is Marcus Shiro, financial firefighter. He went out and bought, I think, 9 properties in 2 years and damn near lost them all. So just, you know, just take that advice and do whatever you want with it. But, you know, you might help.
I'm listening. I'm listening. But to that point, I'm looking at these deals and I'm going, 200 grand in a CD is 8,000 a year. I put 30 grand in a duplex. I expect 8,000 a year.
Yeah, no, I'm with you. I'm just, you know, but you buy a duplex that has foundation issues, sewer issues, legal issues, or, you know, insurance, who knows, right? I mean, I'm with you. The dollars make sense, but there's a whole lot more to it than just the dollars. So just, you know, you got to do you, and everybody does their thing. Just a little piece of it, you know, all these guys that made a lot of money told me, and I wasn't listening either. And I'm glad I did, because Coach Carson was the final one that said, look, man, he just pulled me over and he looked in my eyes, and he's a big dude. He looked right at me and says, look, you need to hear this. That's what he told me, because I was going to go out and buy everything, and I had to slow way down. And I'm glad I did, because I did. I learned I would have probably lost about 20 grand the first year had I done what I did, because I learned a whole bunch of little things that added up to a lot of money with that first one. And then the second one, I avoided all those costs and implemented those changes before I even went live with them. So I believe good way to go.
Realtor just hit me up, so we're close by. I've been through John's book twice last week. Coach Chad Carson, his mentor.
Yeah.
And single family home, slow down, relax, see what's happening. I get it. I don't know why this deal's been on the market for as long as it has, is why I'm like, I don't know. So it's not like I've got plenty on my plate. But as I have a chance to learn and see in markets that some of this stuff, growing up, having rentals in the family, I know some of it flows. I literally drive past the houses that the family used to own that are still rentals 40 years later.
Yeah. See, so you're not new. You've got plenty of history there.
Right. My sister just sold 3 of her rentals last year to buy the farm. I've got counsel here, but I'm trying to figure out, like, my buy box. In my mind, I seem to be developing, how can I consistently put 400 to 600 in paid for properties in income in my pocket, and then just enjoy life, see what the next one brings.
Yep.
We're doing this for another 12 years. It's like, buy what you can sell, buy what I would live in. It's easier to I don't know how else to say it. But what I don't have, and what none of them had, was you guys in a big, like, hey, this is what to look at. I'm astonished at how little time calendar time I've looked at real estate. Like, I got to do something. It's been a year and a half because of that trust of the family. I had to solve problems with family. Beyond that, it's amazing how many real estate professionals don't have a clue. That's me beeping. So thank you, guys. I'm going to check out. I'll touch back in the middle of the week.
All right, man. Good luck.
We got videos on para rents. I think Carrie's thrown it up in the chat. So see what we come up with. Thank you.
See you, man.
Hey, Jared, do you have a sec for me to run through what I'm doing?
Yeah. I was just going to say one thing, though. For the people that are new, there's a few people here. We're just sort of a free form and go with the flow. I typed it in the chat, but go for it, Jim.
Okay, so we've talked about it. My house is closed. I paid cash, 147 plus closing costs. I'm burning out both units, so there's 2 houses on the same property. I've decided to go ahead and take with the smaller property and turn it into a short-term rental, just to test out the theories and everything else. And then the second property or the second house is going to be a long-term rental.
You want to throw out your market real quick, Jim?
I'm in Sacramento, but the property is up in Calaveras County. up in Wilseyville. I'm doing it more for strategy and to test out the theory. So all of this is done by cash, private money, and my HELOC. So I'm going to get it all turned. I should have it turned in about a month and a half, 2 months. So obviously I've been doing this a long time. The turn part is nothing. It's I want to do both of them because now I'm going to have the systems in place. And I'm in Lumberjack's course. I'm in Dion's course. I've taken Coach Carlson's course. I started on one of Zuber's courses. So I've been doing the analysis for 8 months. So I've been creating systems that entire time. So my thought was get through everything, get it all set up, and then get it rented, get the short-term rental going, get that DSCR, and then start over.
You already have your people in place, your service for like cleaning and all that?
Cleaning, I have 2 contacts, which I will be contacting while I'm out there working. So yes, but all the maintenance of this particular property, all the maintenance, all the rehab's all me.
Oh, okay. Oh,
yeah,
so you're close enough to
yeah.
touch. Oh, okay, cool.
It's only an hour and a half away.
Only, holy crap!
That for me, that's nothing.
It really isn't.
Yeah, no, I'm driving all the time. So I'm right now I'm in San Jose for a local meetup that the ORAT people with all the people we met at Vegas. So
awesome.
Then I have to go to Santa Rosa and pick up my trailer to bring up to this new property.
Tell them we said hey.
Yeah. So, but yeah, that's my plan and process. Just any feedback from anybody would be awesome.
I think it's a great idea, Jim. We've discussed it before.
Yeah, exactly.
Hey, do you? So here's one thing with the short-term rental. I'm actually dealing with mine right now, actually, as we speak. Make sure that you have like 3 cleaners.
Yes.
That you have available at all times, because if scheduling gets to be a point where your go-to cleaner is available, you want to be able to contact those other 2, because if they're really good, they get gobbled up by everybody else to have them. And so it's having them on an on-call basis. It's one of those things. And if you can have it to where whatever your bookings are, you automatically either you can build a Calendly, like a platform, you know what Calendly is?
Yep.
It's like a yeah, okay. So you can have it to where you can allow them to have access to your calendar, and you give them access to that for your bookings. So when a booking does come available, they'll get notified that you got a booking for that date, and then they can look on their calendar to see if they have availability to take care of you on it.
Hey, Troy, your audio is kind of going in and out. It's really muffled right now.
Oh, give me a sec here. My stupid AirPods are.
There you go.
There it goes.
Yeah, it's my AirPods are probably dying, and my service area has been. But anyways, get with Calendly where they have access to it, like your main cleaner does, and make sure that when you get a booking, that they can see that they can respond to it within 8 hours, 6 hours, 4 hours, 2 hours, whatever you want to have. Where if it's a close booking, like within, say you have it to where you can book within 3 or 4 days, you're going to want to respond to that, make sure that they can take care of that booking for you. If not, you need to be contacting the other cleaners.
Yeah, and once again, if it comes down to it, and I know I've got a thing coming up and I can't get a hold of any, I drive up there and do it myself. So if I have to, I don't want to on that one.
Yeah,
but yeah.
I think it's a great idea. Another thing is evaluate that property in terms of looking at what there is available in that area in terms of being able to do a midterm rental too.
I already have that. There's a lot to do there. It's just getting people to understand how much there is to do in that area.
Yeah. So I would start contacting the agencies or whatever that's in the area to be able to start getting like them built into your platform of being aware that you have that space available.
Yeah.
That way, if they do have something that's a need, they can contact you and say, hey, I got a client here that needs a place to stay for about the size of your property. They need it for a month. They need it for 2 months. Do you have availability around this time frame? That way, it makes it very flexible for you to sit there and decide on whether you want to shift away from the short-term rental. Say you're just not getting the bookings that you're wanting.
Oh, then I switch it back over to long-term.
Well, you can do it as midterm too, and midterm actually might be.
Yeah, midterm up there is not going to work. There's not enough traffic. Yeah, I already know that.
That's what I was wondering. Okay.
Yeah.
So you were saying it doesn't work. Okay.
Yeah.
Just have an understanding of what's. I mean, you obviously know if it's worth it or not for you.
Yeah, one of the biggest reasons I'm looking to do the short-term rental is to get the process. even if I just break even the first year or lose a little bit of money, that's fine, because I want to get the management system, I want to get the websites, I want to get that whole process up and running on both short-term and long-term rental. It's a learning year for these two properties, and that's why I wanted them close enough to where I can learn on the BRRRR, I can learn on the management of the LTR, and now I can learn on the management and setup and scheduling and everything of the STR, because they're close enough for me to go deal with.
Yep.
And it's a good time of year to start, because I'll have it up and running by June 1st, so I have all summer to run that. Yeah,
I would start marketing it. Start
Yeah.
marketing that in April. If you can, it's gonna be tough because you might not have photos and stuff. But as soon
Yeah.
as you can get quality photos, you can get it up and start marketing it. That way, people can see it on your platform. They can start doing bookings. But that's
yeah,
awesome.
it might actually be able to be done in May, but I don't want the construction of the next door property to be affecting guests.
Yeah, I get that. That makes sense.
Yeah.
With that being said, I know that you have the ability to take care of any like the maintenance related issues. I would have a backup handyman.
Oh,
just in
absolutely.
case you
Yep.
can't-
Already have a list. Yep.
Cool. Good.
Yeah.
Awesome,
I
dude.
have a list of landscapers, list of maintenance people, cleaners. Yeah, I have all the contact people for the county, everything else. And that one of the other reasons I want to do it too is the county, when I went down to talk to them about the permits and stuff, they were so easy to deal with. So I would rather do this, start here, try an easy one, and then work my way to something a little more difficult.
I think it's a good play, man.
And I just found out something new today. That whole 15% tax that California put into effect in January has just been turned over by a judge.
Nice.
So,
because I imagine there's a lot of people there saying that is unconstitutional. Because that's extreme.
Yeah, they said it. They said what they, I don't remember what they said, but I just heard that from a friend of mine. So that's awesome.
Overturned by but was it by a circuit judge or like
that I am not sure. I just know that it was definitely said they can't do it. It's discrimination is what they said. Yeah. So
well, it's because they are discriminating between just regular LTR renters versus someone who's renting it short term. Nice. Well, that's actually really good.
Well, not only that,
precedent.
Yeah, there's already taxes on all this stuff. You already have the TOT taxes, so you're basically double taxing the property.
Yep. Yep.
Jim, where is the property? Sorry, if you don't know.
It's in Wilseyville, California, Pioneer, Amador County, all in the same area.
Oh, okay. Oh.
Yeah. There's a lot of lakes, a lot of rivers. There's some a whole ton of ATV trails, a lot of hiking trails, gold panning. Calaveras has caverns and stuff. There's a couple festivals. It's not like a Yosemite, which is where I really want to be, but it's something to start with. And since I already have a long term on one of them, the short term doesn't have to make up for the entire thing.
Okay.
That was my whole thought process. So I'm going with it. That's my story, and I'm sticking to it.
For those listening, I like this strategy, but I did want to point out, Jim, you have income from other sources. So somebody starting off, they might hear this and say, oh, I need to go out and test this thing, which you do, but just wanted to, put all the data out there. He's got other income that like I have other income too. So I can go do these things and test it. And if it fails, I'm covered. It's not like I'm putting all my eggs. So just for people listening in the future land right now.
And I'm a self-employed contractor, so there's a lot of costs that I can recoup and not have to even. So I put a lot of value add into it and don't even spend the money on it. It just costs me time.
Yep. Cool, man.
So how did your travel go? I didn't hear that part.
Oh yeah, so for those that don't know, I do co-living. We've got 3 properties that have been running for a year and some change, doing really well. So we bought a 4th one, and I went down to put eyes on it, and I'm happy. So we're going to go ahead and close April 2nd. This will be another 8-bedroom, 3-bath. I might do a 4-bath, but it's in Gilbert, Arizona, which is I invest in Arizona. I live in Oregon, but we've got 1 in Glendale, 2 in Phoenix. And I want to say this, my properties in Phoenix, I took a risk about a year ago, and I bought up north away from the hub, the central area, because of TSMC. Well, a week ago when TSMC announced that 100 billion in investments, those 2 properties just became gold. Yeah,
Nice.
my dad used to say it's better to be lucky than good any day. So this is another reason why when I do the renovations on the house and I add bedrooms, I only add walls. I don't like do major construction. So that way, and I don't go to the garage to add bedrooms. I keep it as original as I possibly can. So now that those properties are worth more, it's possible in the next 2 years or 3 years that I shut down the co-living and do an LTR or sell the house and roll it into something else or 1031 because of the values. We'll see. I'm not saying I'm going to do that. But anyway, yeah, we're closing April 2nd on the Gilbert house. It's a more of a high-end market. So it's going to be different than the week to week that I've been doing. I'm going to do 3-month leases and we're going to experiment with it just like you're doing, Jim, because I have a W-2 and I have other income. It gives us the leeway to experiment. I'm going to do probably half unfurnished and half furnished and see how it goes in 3-month plus leases.
So how are you picking the market that you're finding the house?
So I've been experimenting along the way. I started in the West Valley, which I knew was a lower income. Like just if you look at like say city data will show that in the Glendale area, the medium income there is 28,000 a year. So it's pretty low. And the numbers worked really well in South Phoenix. And then I was like, cool, spreadsheet math. Flew down there and went, nope, not doing this because just not safe, guns going off, cops won't even go there. Nope, it's on. This is that spreadsheet math for people that are looking in markets and doing things. A spreadsheet, it looked great, and then I went down there and I was like, this is a freaking war zone. So I got out of there and went way up north and decided to buy one there because the numbers worked and the cost was okay, and ran a pilot and it was successful. But the problem was everybody and their mother found out the same thing about the same time, so the supply grew in that area. Like in the valley in Arizona, if you look, the west side in Glendale, I'm going to go ahead and say, just guessing, it's probably half of the inventory for that strategy is just in that area because the numbers worked. It's a good enough area because I'm buying in C plus B minus area. So because the supply increased so much, I had to deviate. And that's why I'm actually glad. It's funny, all the issues I've had ended up being positives in the long run because I was pissed. I was like, damn it, everybody and their mother's here. So I spent a little bit more money, went up north. I figured I'll try the TSMC thing, and they finished that building, and it worked, and it was great. So, and I'm glad I did that because now those two properties are my best performing. Well, I've only got three, but those two properties are almost 100% full relative to the other one that's about 85% full because of the turnover. And a lot of that's because of TSMC. 30% of the people staying in those properties are TSMC employees. I'm not talking about, the engineers. I'm talking about the security guards and the fiber cable guys and the tangential or the periphery around the effort there. And that's just going to grow, especially now with another 100 billion. So I'm picking it and learning as I go. But the clientele there's good, but I figured I'm in a position now, like I have a high income W-2, got money in the bank. So I'm doing kind of what you're doing, kind of what Charles was doing is I'm testing things out now, piloting in different areas. So I went east partially because of the appreciation. So like that Glendale house, it's appreciated like I think 1.9, almost 2% in the time I've had it. And the other two Phoenix houses are 3.8% or three point something. I don't remember, but they're a little bit more. And then this Gilbert house is 4.4%. So the appreciation. So my goal is cash flow with the potential for appreciation. So I can cash flow the Gilbert house. Now it won't make as much as the others. I'll come in about, probably 15% lower. But the appreciation in 5 years, or 10 years or whatever, I'll look back on and go, hey, I'm glad I did that. I think. So, but it's also a different strategy within the co-living. So I'm going off here. So you asked, but I'll shut up after this point. The other co-living that I'm doing is through pad split, and it's week to week, and it's furnished, and it's fairly high turnover. If you do the average across 3 properties in a year, it's 3.6 months is the average stay. But I have some people that been with me the whole time for a year or so. So that's why I'm saying the average is basically almost 4 months. So a lot of turnover. So anybody interested in this, you're dealing with a lot of turnover. That's why I mentioned earlier about the cleaning lady, because cleaning ladies are important. But this Gilbert play will be a 3-month lease, some unfurnished, some furnished, and we'll see how it goes.
So it's almost like an MTR in a way.
That's what I was thinking.
But personal or just
Yeah.
one room instead of the whole place.
Yep, it's MTR with single room, common spaces shared. Yep.
How do you handle the lease on those, Jared? I've always been curious.
I don't do leases. I
You
do
don't?
I do member agreements.
Okay.
So is that a DocuSign form that you send through an email? Like, how does that work out for you? What's that process like?
Yeah, so currently with pad split, they're handling that part, but we reverse engineered pad splits. I know this is being recorded, but everybody else has done it. So our lawyers reverse engineered their member agreements, and I built my own. So and for anybody anyway, so that's what I'm doing. I'm doing a member agreement. That way you don't fall under the tenant laws. So, judge me if you will, but they've held up in court so far, and they've been doing it for 20 years. So we'll see how this goes.
You have to
It's
find workarounds. You have to. There's
well,
just no way to
it's
do it.
no different than a typical lease agreement. It's just temporary. I mean,
Yeah.
it's basically you're basically making an agreement that states that they're living there on a monthly basis, and these are the rules that they have to abide by. This is what it costs. Yada yada yada.
Yeah.
Basically, right?
Well, it's like a gym membership. So if you think of it that way, it's easier to understand. So essentially, you're a part of a group, and then as that, your fees buy you the right to occupy that property month to month within the 3-month lease. So it's you're buying the membership for the access to the property as part of the agreement.
Are you marketing any other way besides pad split?
I'm starting. Well, I'm not doing pad split moving forward. For those that don't know, pad split changed their fee structure and really pissed me off. But I was upset about it, but now I'm super happy because that's why our occupancy has gone way up. I should do an analysis on the last 3 months versus 3 months at a quarter at a time, because I'm guessing it went way up because all the investors stopped investing with pad split. Well, that's my assumption. Well, I can tell you that on average in the last year and a half, you had about 140 units on average online. Now we're down to 30 in the entire valley, right? So drastic reduction in the amount of properties. You could say, hey, pad split got really good at marketing and filled all those rooms, which, I guess is possible. But, in the year it's been about 140 on average, a lot of hosts coming on. Or my belief is they change their fee structure and all the investors stop. That's what I've heard through the industry. And a lot of people are doing exactly what I'm doing, which is, hey, we had the training wheels with pad split. Now we're moving on and doing it ourselves. We're just going to host it and run it ourselves. But I'm experimenting with that. I've used Turbo Tenant in the past. I really like it. Facebook Marketplace, everybody loves, except for me. You get a lot of interest, not a single turnover, not a single what do they call that? Conversion
ratio.
Conversion ratio is like zero. Whole lot of effort, nothing. Boys, Turbo Tenant has worked for me. I get about a 4% return, and before somebody freaks out on that, time. So I don't spend any time on it, kind of like Dion's method. I set everything up in Turbo Tenant. It fires off to like 50 different aggregate sites, and apartments.com is the one that's worked for me. And all I do is when the email comes back, I just reply to that email, which goes right to the potential member or tenant, whatever you want to call it, with my little form. So it takes me 2 seconds. And then out of that, I've had about a 4% conversion rate through apartments.com from Turbo Tenant. Sounds small, but if you look at it from a time perspective, I don't spend a lot of time on it. But I'm also going to try Hemlane. I'm going to see how that goes.
So are you going to collect your rents from them too, or is the rent going directly to you?
Maybe. Yeah. So Hemlane, I don't know. I haven't explored it yet. I talked to Dana when we were at the ORAD event, and she said, because I talked to her about a year ago, and they were like, what's co-living? You know what I mean? Not, that weren't that they knew what it was, but they weren't involved with it. Now they've got like 1 to 2% of their platform has a lot of rent by room. And so they've got more stuff in there. I think they charge $2.50 per room. So that's fantastic, right? But we'll see what there's different tiers to it. So I haven't got too deep into it. I wasn't going to go too deep until I got the house and found what I was doing. And so that's what we're going to do. We'll check into it.
Let me know on that Hemlane, because I've looked into them. They seem to me a lot more expensive than all the other CRMs.
Yeah, they are.
And if they're, is it a membership fee plus $2 per room?
The membership is just between me and the member, the tenant, and then that $2.50 is what Hemlane said. I don't know. I haven't looked into it. It's what she told me verbally at the ORAD event in Vegas. Is what they charge.
I was looking at having them be, because I was looking at changing. I was using Rent Ready, and I'm not like super happy with it. But I've been turned on to Turbo Tenant because it's a free service. And I'm like, for what? The work that I do with Rent Ready and the complex, like they've created an issue with me as my current tenant right now that was actually caused by them. And
Mm.
so it's like, but yet they've made it to where like they basically kicked my tenant off their platform. So basically, I'm like paying for service that I'm not getting.
That's
So
that's good to
but
know. I have Rent Ready because of Bigger Pockets Pro, and that was kind of my.
that's exactly why we did it too.
Hmm.
So it's to me, I like there's some benefits to it, but it's like and they are working on it to try to make it more flexible and user friendly. To me, it doesn't. It's sometimes it can not be user friendly, especially when you have like tenants. Well, especially for long terms. Like I have a tenant that has been pretty consistently not paying rent on time, but he always pays it.
Hmm.
And so it's like when you have the fees and all that stuff that go into, you have to go into the system and you actually have to manually like adjust it, and sometimes it doesn't do it properly. So it's there's a lot more like if you're wanting to use the program to where it's simple and easy to use, I wouldn't suggest that being one of them.
Yeah,
You would or wouldn't?
I would not suggest using it if you really want it for like something that is hands off.
Okay.
You do. I mean, it provides everything you need, but at the same time, like if when it comes to like things that are complex, like if you say you have like 10 units and you have 20 tenants, and say you have like 6 of them that didn't pay, on time, you have to go in through it and manually, you have to manually do all the work of, adjusting payments, making sure that your tenants paid the late fees, and then correct it to where it shows like they've paid the balance on it.
Okay. So it's antiquated software. Gotcha.
Yeah,
Yeah,
I've had two meetings with Door Loop. It's going to cost me a little bit more than all those, but it has way more scalability, and it's a lot. It seems like it's going to be a lot easier because it has the accounting program to it too. And because I don't deal with websites and all that, so I think I'm better off spending a little bit of money there because I make more money on the rehab than I do on anything else.
yeah.
So I'm probably going to go with that Door Loop.
Door loop
Another
is great so far for me, except the only thing I hate about door loop is you can't link credit card accounts to it. So if you're tracking expenses that way, it's not going to turn out well.
Really? They don't have a drop down on that, or you can still
No,
make.
it's only bank accounts they have. You can link your
So
account and
it's
track your
eight
transactions.
transfers only. Yeah, that's one reason.
No. What I'm saying is like on door loop, they allow you to link your bank account to like track transactions. So door loop you can build expense reports on, and but the problem with that is when you're going through your expenses, the only thing you can link up is your bank account. You cannot link up credit card accounts. So if you're like me, who like shops at Home Depot on credit cards, well, I'm out of luck and can't like I have to manually create those transactions on
Uh,
door loop to get an expense report. That's
Oh,
what I'm
so
complaining about.
the only difference is you can't download the statement. That's correct.
Download.
You
Oh,
can
no,
you
you
can't
can't create.
upload. Yeah, you can't upload it, but you can input it to its own account though.
Yeah, you can input it to its. It's
it's a
just the
manual
thing
entry.
that drives
Yeah,
me. I don't like manual entries. As a software engineer, I hate manual entry, and it just drives me insane.
gotcha. Yeah, it's
And you're
time
talking about
consuming, but I do most of my stuff that way, so that won't affect me.
What
and
what
that
what Door
Uh,
does do, and I don't know about the others, and this is probably way beyond most of you, but Door Loop, and I'm going to play this in the future, has an API you can use, so you can actually write software programs to do things on it. So I don't know about if like Hemlane has that, but that's something I want to look into because I can do a lot with that.
I would doubt Hemlane has that because I think I'm not knocking Dana. I love her, great and all that, but I think they want to try to encapsulate you into their platform. That's actually one of my concerns. Is they do accept all forms of payment from tenants, which is great. But let's say you use Hemlane and you do that for a year, and then you want to switch. Now you have tenants that are used to paying a certain way, and you switch to some other platform. That could get a little fun for the tenants. You know what I mean?
Well, here's the thing I know is as a person who works on a data modeling product and software. Software companies intentionally make it a pain in the ass for you to switch over to a competitor. So that's kind of the point.
Yeah, yeah. But as long as you know
Hey,
that going into it and you have a mitigation. Yeah, go ahead. Somebody wanted to say something.
I was like, Jared, you mentioned handling. This is something that I've been experiencing with, and that's not everybody. I think any of the CRMs have really kind of like adjusted to is being able to utilize like Venmo or Apple Pay or even it'll be interesting when they start allowing you to use crypto to pay for your rent. But I do find that there's a lot of people, a lot of young people that like to pay with Venmo, and they have their accounts linked to doing Apple Pay or something like that. And I have several tenants that actually pay me that way. And so then it's like, okay, it almost kind of defeats the purpose by having a CRM if I'm having to receive payment and then I take it and put it into my account and then transfer it through my CRM to show that they paid it. It's just, it can be kind of like antiquated. But I'm not sure, does Blaine allow for like Venmo and Apple Pay or like that?
She said that any form of payment they take. Now, I don't know what that means, but it sounds pretty broad to me. So I'm going to find out. I'm going to go explore. They have a free version, which I'm not sure what that offers.
That's why.
As I said, that's definitely like something I would be very curious about. That would be very encouraging to me to look into further into that CRM because I think it's something that that's where a lot of our tenant base is going to start. They're going to have that flexibility, and it's almost as good as cash, which is I'd almost rather have that because it won't let you transfer funds through it unless it's guaranteed.
So Jason, I see you came off mute. You want to jump in here?
I was gonna jump in. Everybody was talking. So hey everyone, I'm Jason. I'm an investor here in South Florida. I wanted to ask you guys, what do you guys do for your leases?
In particular,
Long, like how do you guys go about getting your leases? I've used what is it, Law Rocket? Law Depot.
sorry, I'm going through a patch area, so I didn't hear all that.
Oh, I said, what do you guys use to get your leases for your long-term rentals?
I actually use in our lease agreement we use Bigger Pockets. Since we're a Bigger Pockets Pro, we went on there and went to the state and found their lease agreement they have on there. But the one thing that we did come across on it, there was something that I was kind of shocked at that we didn't catch when we did our first lease up. Because so we're just going through our first lease up with our tenants. It's been over a year now. The one thing I didn't find in it that I was kind of shocked by is there wasn't like a section in there talking about when they needed to inform us that they were moving out, like a 30-day notice, and then what the procedure was of all the move out, and so we're having to go through and edit it. But I know that there are lease agreements online through Google that you can research for your state. That's just a standard form. That's one place to start.
Yeah, because right now I have two properties, and the first one, I use like a generic lease, but now I'm trying to get more like detailed with it, and like make sure I have a good understanding just in case I ever need to use it or evict somebody.
Yeah, all the management or things like PMS, Hemlane, they all have contracts in there. But I'm going to take that contract whenever I sign up with them, and I'm going to take it to an attorney.
Yeah, I know a lot of people don't do that, but I plan on doing something similar. I mean, I have it drawn up, but I want to ask the attorney.
Yeah,
hey, look,
having a good.
Yeah, I want to ask the attorney, hey, if I have to evict or something, would you stand behind this? Right? Like, is this going to hold up?
Yeah, so I'm a part of multifamily strategies, and the one thing that Christian talks about, because he's managed in multiple states, is the one thing when it comes to having leases is like just have the understanding that they're always going to evolve. And the one thing that he noticed through his,
Hey, Troy, you're breaking up pretty bad, man.
When you come across, like, he comes across, sorry, this reception in this area is shitty. Sorry, guys. Can you hear me better now?
Yeah, your internet still says red, but it's working.
Yeah, I'm going to the transfer station to get rid of some garbage and stuff. What I was saying is that Christian with multifamily strategies, he basically says always plan that your lease agreement is always going to evolve, because it's going to change from property to property. It could change from, something that you didn't account for, from, something that happened with your last tenant. Like, another thing is always compare your lease agreements to other people's. Some people always include stuff in there that you wouldn't have thought of, that he's like, oh my gosh, when he's looked at lease ups in terms of his properties by looking at all the leases for doing a buyout, he's found stuff on those leases where it's like, man, I should have that in my lease agreement. So they change them. So, I would just maybe talk to some people that's in your real estate area, in a real estate meetup, and ask people in that area, like, hey, what did they make sure that they have in their lease agreement that maybe you might not have?
Mm-hmm. Yeah. And Jared, your leases are pretty different, right, with the co-living model?
Yeah, they're not even leases, they're just member agreements.
And that's because there is it's registered as a single family home, right?
Yeah,
And
it's a single family home with multiple units in it. Most municipalities have I was surprised Mesa actually has up to 5, but usually it's around the 3 non-family, up to 3 non-family members living in a particular home, but it's based on tenant laws. And if you don't use tenant laws, if you're a member, then you're outside I know, let the lawyers, it's a way to get around it, but it is what it is. It's held up so far, but that's what we're doing. They're member agreements instead of a lease with the tenant. I have something I want to throw out there real quick. I typed it in the chat, but I stumbled on something here a little bit ago. I think it's awesome. Getting to know the junk removal people in your market can be, I hasn't turned in anything yet, but I think it's potential lucrative, because people that are, trying to sell a home, or at least working towards that, they'll hire junk people to come get all their stuff out, or maybe it's a disaster or whatever. You can find out about that property even before it's listed, right? And potentially start talking to the owners and say, look, I can take this off your hands right now for X or whatever, even before don't worry about cleaning it up and photography and putting it on the MLS and waiting 3 months to sell it. I can buy it right now. That's kind of the idea.
That's smart.
Yeah, I stumbled
I have
on
a
it.
relationship with a junk company. They gave me a discount because I've used them 3 times, and they probably give me more discounts again. I know the owner now.
Nice.
Yeah, I think that's a smart idea. I like that.
Yeah, I'm exploring a bunch of different avenues because I'm trying to retire in about a year or two. And so I'm doing some AI stuff, networking with people, obviously, junk guy, but I also just hired a VA, Jennifer Stewart. You may have seen her on Matt the Lumberjacks channel. And I hired her about a week ago, and she's the front end to VA. So they have a data miner section, and then they have a cold caller section. You can choose which tier you want. I went ahead and went with the big tier. So I hired both. It's like 540. Well, she says it's 540 a month, which it is, but then you have to buy the batch dialer, which is like $120 a year or something like that. And if you use, I have a code for that. I'm such a cheap ass. I did chat GPT and said, give me a code, and I got it for $50. So, but there's more cost to that. So anyway, I'll report back how it's going. Just FYI, if people are interested in that or heard of it. So basically, you're hiring VAs to cold call lists that you generate with the data miner. You give the data miner your buy box. She does up to 4,000 on a list in a month. So for me, it's about 800 and some a week. So it still falls under that 4,000 a month. So anyway, we'll see how it goes.
You are such a hustler, Jared. Love it.
I figured I'd try it out, and if it works, great. And if it does, and this isn't going to be a tomorrow I get a deal. It'll be 6 months to a year type of thing. It's a long burn. So I figured even if I spend let's say 600 a month or 500 a month, whatever. Let's say I spend $2,500, but I get a deal out of that. It's worth it right there. You know what I mean?
Well, that's what Matt was saying. It's like, yeah, it's about building the pipeline, right?
Yep.
I mean, the key is that you are really clear on your buy box and where
Yeah.
what you want where you want the target. Otherwise, it's, you're all over the place and they don't know how to serve you.
Yeah.
That is the team you're hiring. You want to give them really clear.
So far, it's pretty cool because she's using WhatsApp, and then she creates these groups. She creates a data miner group, and then or whatever they call it, and then a list, and then you have the cold caller loop. And in the cold caller group, the cold caller has out of Philippines. It's a guy, but he sounds like a girl, which I think is an advantage. But anyway, they put in who they've called, what their status is, and then you can. I tied that person into my CRM. I use Podio, I know, but it's easy. And I had to buy another license, which was like, I don't know, $8 or whatever the hell it was, $16. It's 20, yeah. Well, anyway, whatever, it's cheap. So I bought another license so that person could be in there, and I downloaded the free deal flow add-in. So I threw that in there, and he's in there categorizing things. So it's actually pretty cool. I think it's worth it so far. We'll see.
Hey, out of curiosity, Jared, how much time are you dedicating to that every day?
To what?
To analyze that information, to look at what's a good deal, to get because they're going to be sending you quite a bit of stuff, aren't they?
Yeah, but I built you guys have probably seen it. I'll share it real quick just for the hell of it. You guys seeing my screen?
Coming up. Nice.
Yeah, so I built a calculator. So all I do is this is my last property that I'm buying. It was listed for 630. I'm picking it up for 565. Actually, it's 562. I'll just pay 563. I have a badass agent. He went and negotiated another. We already got this thing for cheaper, and he went and negotiated another $5,000. The guy's awesome. But anyway, so I just plug it in here, and this is how I evaluate. So my cost, whoops, let's just leave it where it was. So my total expenses on this thing is going to be over $5,000. And with 7 units, it's an 8-bedroom, but I'm putting it in as 7 just for conservative. I come out positive 700 and some. Now, normally I try to hit above 1,000 net a month, but this is good enough because of the potential for appreciation. And it just so happens, you guys have heard the old thing, buy the worst house in the best neighborhood kind of thing.
Mm-hmm.
This is take that idea and extrapolate it. It's an older neighborhood. The whole damn town of Gilbert's old, but it's all gentrified all the way around this 40 to 50 house area, right? So all the houses around it are newer, and it's really, really nice. And so my thought process, I know, Gina, you're an agent. Maybe you could tell me, my thought process is that the reason it had a 4.4% appreciation last year, even in a somewhat down or flat market, is because of that. And the medium age is 32, whereas other markets are closer to 39, 40 of homeowners. If you go to the town of Gilbert, you'll go downtown Gilbert, and everybody's young. I'm old as hell. I went in there and have tacos with my agent, and we were by far the oldest people there. So it's like a gentrified young community, and there's not a lot of industry there. There's only the downtown and some other stuff. I've been trying to target Chandler for the longest time, but I can't seem to make anything work. So Gilbert's right next door. And so that's why we did that. So it's kind of a half-ass appreciation play, but with the cash flow. As long as the house pays for itself and I come in close to the 700, I'm happy-ish. Plus, I should mention this. The reason I'm doing this, I'm experimenting because I'm buying this as a primary. So judge me if you will, but there's a quote unquote ADU in the back. It's basically a shed. And that's going to be my room. And so I'm going to put a toothbrush and a bed and some facilities out there. And I will travel down there. Oh, well, anyway, I'm going to live there. I'll probably edit that part out. But yeah, so I'll occupy that room, and the other 8 rooms will be rented out. So I'm experimenting with it. So I bought it as a primary. So I'm getting it, as you can see here, I'm getting into this thing for $28,000, actually less now. So, I mean, dude, $28,000 on an over $500,000, basically a 600 plus asset. That's a no-brainer to me. Plus it's going to pay for itself. You know what I mean?
9 bedroom. You're renting out.
It will never be a 9. I can never rent the ADU. I'm talking this thing's pretty bad. Like it's a shed. It's an actual building and it's good. The roof is good, but the inside, the floors are what is it? Convex. It's like the edges are dropped down, and it's not something you'd want to rent to somebody. At least not with a straight face. So, but I can.
You're not going to sleep overnight there, I suppose.
No, it's
Your
not
toothbrush will.
You have plans of fixing it up?
I thought about it, but the problem I have with this particular property is parking. I harp on this, and I can't believe I'm doing this, but it's a 6-bedroom, 3-bath now, and I'm gonna probably add a half bath for the hell of it, but because I can. For fairly cheap, but it can only park 5 cars. But the reason I'm doing it is because I look at these type of things. There's a bus stop, and it says 8-minute walk, but it's more like a 5-minute walk. It's right there. It's right down the street and up the street a little bit. There's bus stop right there. So I'm hoping the public transit will help out. My other properties, I'm about 65% of the people have cars. So roughly the 5 parking spots could work. Now this is a different market for me. It's a little more affluent, a little higher end. So it might be that more people have cars, but I don't know, man. We'll see.
Are you gonna get neighbor complaints or anything?
So it just so happens it's at the end of a street. So it's the very last house, and the other side of the house is a school playground. So it's good and bad. It's good because the only neighbors that probably complain are the ones across the street. And I don't, just judging by the house, I don't think they're going to complain, but we'll see. But it's good and bad because it's good, probably less neighbor potential complaints, but also not a lot of room for jockeying cars around, man. Like you drive to the end of the street and you drive in the driveway, you can put 2 there and then 3 on the street. And that's about it. If I start getting any more than that, I'm going to start pissing off neighbors, and I don't want to do that. So anyway, I'll stop sharing.
Congrats. I mean, congratulations. I feel like I'm on moving out of your, like learning from your buy box and going, something's not working and then just making that, that switch is awesome.
Oh, they're working. I'm happy with the returns big time.
Well, I mean, by choosing another neighbor, you said you were looking in Chandler, but then you're like,
oh yeah,
let me go to this other area and just see what else is out there and be open.
Yeah, I was focused on Chandler because it fits all the stuff, and it's a little bit. We're about 500 or so. I'd say my west side properties are 400s, 450, and then Chandler's about 500K, and then Gilbert's 600. But I happen to get this one for 560. It's a taken off appreciation wise. It's the number 4 market in Arizona. Chandler's number 1 just because of the industry, but the cost of the house is actually cheaper in Chandler. What I mean by that is if you look at the Cromford report, which is in Arizona, which I don't have access to, but people I know do, Chandler's the number 1. It's still a buyer or still a seller's market by far. So like Arizona as a whole, it's a buyer's market. And a lot of places are buyer's market, but there's certain cities, if you drill down, Chandler's the number 1 seller's market, according to the Cromford report, and Gilbert's the number 4. So there's still seller's market. So I feel pretty lucky to have grabbed this property, especially because, and I'm going off here and I'll shut up. It's a 1976 home, but it's got ABS plumbing and ABS sewer and whatnot, and copper. So it's all done. The roof is 4 years old. The AC is 4 years. Everything's under 4 years old. Everything. So I feel pretty good about it.
That's huge. So our inspections are done and everything's, yeah.
Inspection's done. I flew down there to put eyes on it just to make sure and walk around and get a feel for it. I'm glad I did because the when you get the report or you get the layout for the dimensions, they're not always accurate, let's say. I mean, sometimes, you got doors that open different ways and things like that. I'm talking the dimensions were wrong. As soon as I went there and I walked into the house, I knew instantly the room that I wanted to split in 2 to make 2 rooms, not going to happen for 2 reasons. And this is also another reason I want this house is it's a basement house, right? It stays cool down below. And in Arizona, I'd say, I don't know what the percentage is, but it's got to be single digit homes with basements in them. And so that'll be desirable. So like down the road, let's say 5, 6, 7 years, whatever, appreciation goes nuts and it's an awesome market and all that gentrification happened and everything's wonderful. I could, if I wanted to flex and change down the road, that basement could be turned into something pretty special. Given the area and whatnot, it could be, I could take all the walls down, load bearing, non-load bearing, and create like a house that I'd want to maybe long-term rent or sell or whatever. I don't know. There's a lot of flexibility with it.
Cool. And then you have contractors in the area, I guess.
Yeah, I've got contractors. I like them, and I've done this in the past, and I think I'm going to switch on this one too, just because it's a little bit of a higher end market. So I have contractors that I like. Hopefully, they don't get this far in the video if they watch it. I know one of the contractors' wife watches all my stuff, so this will suck. But anyway, they're good. Like they come in on time, on budget, but some of the details, not so much. So what I've done is I'll have the contractors come in, do the major construction, and then I'll come back through with my handyman and deal with all the detailed stuff because heaven forbid I do any work. I'm out of state, so that's my excuse. And so it works out, and it just takes a little bit longer. So if you're under time crunch, like if you're doing flips or something, hard money loans or something, I wouldn't do it. But for me, I'm buying the thing and I'm going to buy and hold. So that's what I've been doing. But I think with this one, because I also want to try. I have a contractor that I bought a house from, and I've seen his work. He does a lot of really good work. He's a little bit more expensive. K10 is the name of the contract company, and Spencer's the owner. He's a little bit arrogant, but he's kind of got the right to do that a little bit because he does really good work. I don't know if I haven't seen any other work anywhere, and I've seen a lot of different contractors in the valley that do what he does. And he's a little bit more expensive, but he's worth it because if you want everything done with one person, he's the GC. He's going to get paid for what he does, but his subcontractors are really good and they come in and they do really good work. I haven't been able to afford the guy because he's too expensive, but this house, because I'm getting it so cheap, I'm going to get a bid from him. And if it comes in close, I'm kind of leaning towards using him just to see, because I've seen his work before. It's fantastic. And I bought one of the houses he did, and it's great. I mean, they did a fantastic job on it. So that's kind of why I'm trying them out. So
That's really cool. Yeah. I mean, I think well, the bad, a wrong, let's not say bad, but a wrong contractor, and it happens at the time, let's say, put it that way, it can just set you back so far. Yeah.
good to see you, by the way. I haven't seen you in a long time.
I know. I miss you guys before Christmas. My goodness, you guys had a lot going on.
Yeah.
Done a lot. Cool.
Hey, Jared.
Yo.
Hey, have you thought about, having a Zoom like on an evening or something where all you're doing is talking about your rent by room? Because, man, I'd love to sit there and ask you a lot of questions about how you're doing this, because I'm very, in my market, I see a really good potential for it. It's just, I want to be able to know like how you analyze a property, what you're looking for, and then how you're setting up your platform in terms of like being able to rent out and get it leased up and doing that quick turn. And I understand like your cleaners kind of basis, because I run a short-term rental, but I haven't set a short-term rental up out of state, like especially in my market. So I have a cleaning lady I know that I could reach out to that would do a fantastic job at it. But I see there's a really good opportunity to potentially do what you're doing in my market as well.
Yeah, so I had one back in November, and that's funny you mentioned that because on Skool on ORAT, somebody reached out. I want to say Chloe, but it's not Chloe; it's somebody else. Reached out and said, "Hey, I'd really like to set one up." So yeah, I told her, "Hey, I'm free and week. I'm an open book. You guys know me. I talk forever, especially I don't have around. If I get some caffeine in me, I just go 90 miles an hour." And Shane and Max will tell you, I got them. I trapped him in a coffee. They're Oregon guys, so I trapped him in a coffee shop for 6 hours one day, and they're like, "Look, man, we got to go." So yeah, I'll spew till people tell me to shut up. But yeah, I'd love to do that. I love this stuff, man. I feel really lucky that. And then Lars, I see your hand up, and I did see your text, and I'll address it in a second. So I feel really lucky to have found something that a lot of us, maybe you guys on the phone, are doing this as a means to an end because of income. Well, I feel lucky in that I like this, right? I like the income and all the money, but I actually really like it because for me, it's income, it's fun. I like the analyzing, and I'm doing everything myself. And I know that can be limiting, but I also like it for what I'm doing. It's a win-win. I haven't talked about this much, but when I talk to the members, it's awesome, man. I have this lady, I'll say her name, Amina. She's like the house mom. I was just there the other day, and they put a picture up of her. This is how cool it is. It's not mean. She kind of runs the house and I let it happen because she's really good at it. She loves cleaning. Hell, she weeds, for God's sakes. I mean, she loves it. And she she told me her story, and it's a long, sad story, but she's comfortable. She said it's the first time she's felt comfortable in 15 years. She had a stroke, lost her job, lost her house, a whole bunch of stuff. And so for me, all these stories that I hear, you guys have heard me talk about the nurse that was working 3 jobs and was with me for about 8 months, and she left. And I was like, "What's going on? What did I do wrong?" She's like, "Oh, no, 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 I'm buying a house." Things like that. So it's a win-win-win for everybody. But so yeah, I'd love to do that, Troy. I guess I'm free week nights and at late in the evening, Pacific time, and then weekends, and then
Say we're in the same time zone, so and we hung out at
yeah, I know. Remember that was
so,
awesome.
yeah, you and I could talk for days. So.
Yeah, man. Yeah, and
We'll
then
take notes.
yeah, and I had someone reach out and text me, "Be careful," and I'll explain it on the video in case I get sued or whatever. So it just so happens I'm an IT manager at Intel. I have sites everywhere but Oregon, so I don't even need to be in Oregon. It just so happens I live here, so I'm buying that as a primary because I'm going to fly down there and be there a lot. And so that's I'll probably edit all this part out just for the hell of it, but I'm going to be there quite a bit. My manager is all about it. He's like, "Yeah, even if you want to switch your residence at Intel to Arizona, we'll do that too." And I'm like, "No, no, no, my wife's not going to go for that." So to address the person who texted me on that, so we
That's
have
wonderful.
a question from Lars. Wait.
Yeah, I have a question for you. With Himley, because I know I put an offer on a fourplex and unfortunately got outbid, but we're looking at an offer, but put in offers in Pittsburgh, and I was planning on using Himley to self-manage. If I get, do you have to use their leases? Does anybody know, or can you like get a lawyer to write one up and use that for your tenants?
I mean, I think you could ask them directly. I don't think they'd be offended.
Yeah. Sorry, guys, I'm in the middle of emptying out garbage, but you can use your own lease.
Okay, no, I was making sure. I was wanting to know that because yeah, because I think I think if I end up getting a fourplex or something that's a significant amount of capital for me, I am probably going to use Matt Lumberjack's method of going to eviction court, finding the good lawyer, and just paying them to write up the lease, and then paying them to write up the lease and use that one. So, anyways, I was just wondering if maybe somehow my plan is so I can go ahead and use my own lease for Hamley and use the full service if I want to. Then
You maybe want to just double check with them,
so.
Before you have to like redo it. But I'm sure that if they bring on a new tenant like that's already existing, then that there is an existing lease, a pre-existing lease that they would have to honor. So they should be able to flex with that.
Right, that's what I was thinking. Like you'd have to go with whatever the current lease is. So why wouldn't I be able to use my own?
Right.
Use my own. And obviously, like if you're going to find a good eviction lawyer and have them write up a lease, the whole purpose of that is so they have is so is like so they know they'll know what's going to hold up in that area versus I'm sure I know Himley has like all the laws down, but still, I mean, anyone who's lived in the real world understands that there's the rules and then there's what's enforced.
Oh, there's city laws, there's neighborhood laws.
Yeah, I mean, some laws aren't enforced. That's just reality, right? Like they're there, and they're enforced when somebody, they're enforced when you get the 1 in 1,000 judge. But there are some laws that are just never enforced, except for that 1 in 1,000 judge. Those exist everywhere. So, to me, finding a lawyer who knows what works in the area. Obviously, you have to find a good one and all that crap, but I think that's worth its weight in gold there itself. Because I live in Oregon. I'm invested in Pennsylvania. I can go online and see what the law is, but nobody obeys all the laws. No one. So there's just too many of them to obey all of them. We all know that. Blue laws is a term for a reason. So, anyways, that's what I was wondering. So
when it comes to CRM, don't trust them providing you with a lease. All they're going to do is just have a standardized lease that generated, and it should be generated with state-specific information. They're not going to have everything in it. And, if you know enough about structuring your lease to protect your assets and abide by certain tenant rules, then you're probably most likely going to have to do some form of addition to your lease agreement. I would the biggest thing for you, especially if any of you guys are first timers when it comes to creating leases, is being informed on your landlord tenant laws in your state, in your county, in your city, in your, specifically to your area. That is going to be one of the biggest things you're going to have to be aware of, because then you can go through your lease and see, hey, this isn't included in here. I need to add this to it, or I would feel more comfortable with this addendum added to it to protect my asset. When it comes to like having a good lawyer as you speak, having that good lawyer is definitely going to be something you want to find, and that's going to take a process. That if you are having to evict somebody. So it's not a matter of them, looking over your leases and giving you that sense of protection. They can go through it and say, hey, this is a good lease, but it doesn't encompass everything. It's having that relationship and building that relationship for just in case that ever happens. Which it can and will happen. It's just, I wouldn't go out and seek out a lawyer to look through your lease agreement, because you're going to spend a lot of money just to have someone look through that lease agreement when it will probably most likely, if it's state specific and you've filtered through that entire lease, it's probably going to have everything in there that you should have. And if it doesn't, then you can add that to it without having to pay a lawyer.
Okay, got it. Yeah, thank you. I was just kind of thinking through that. Like, it just kind of came to my head there, and I know, if you ever take like Matt Lumberjack's landlord course, he talks about going to sit in eviction court, and if you spend a day there, you'll quickly find out who are the good ones, who are the bad ones, and then you just go to the good ones and just say, and just say, hey, can I pay you to write a lease agreement for me? I'm about to get some new tenants. And I'd like you to be my lawyer, and so I imagine you want a lease agreement that you stand behind. And he didn't come out and say it, but he kind of hinted towards, or maybe he did say it at one point, it's just cheaper to have them write it than it is for them to look over what you currently have. Like, just have them write their own, and then just replace whatever the old one is with that one when you can, as soon as you can, right? When the lease is up, no, this is the new lease. We're not going off the old one. We're going off the new one.
Well, and to tag on to that, you could actually just call their office and go, hey, do you have a lease? Do you guys have a standard lease? They'll just send it to you because they want your future business. So they'll send you a PDF.
Yeah. That's a great idea too, Gina.
That was my I had an eviction, and so and they, and actually I was looking online, but I go, oh, okay, Pennsylvania, let me look. I've just found this one lawyer, Barrett's Law. But that's what I would do, is just look up a couple attorneys you may just, in Pennsylvania, and just call their office, or see if, this guy's got articles, see if they already have, they may even have it already, queued up, free download or whatever. Just that way.
Yeah. Makes sense, Gina. Thank you.
This is something, if you guys really want to kind of take a roundabout way of getting to know some of the landlords in your market, you could look at the multifamily properties that are listed, and you can say you're interested in the list in the actual property and make an offer. You could request information about what, because when you're looking at a multifamily property, you got to know what the leases are. And a lot of times they'll provide you the leases that are existing for current tenants, and you can look through those leases. They'll have information redacted on them, but you can see like what is in that lease agreement, and sometimes those can be really useful. But then you can see some that are like, wow, and that is so generic. Like this is the most basic lease agreement I think I've ever seen.
That's a good idea. I didn't think of that. I do it a different way. I reach out to other co-living operators and just, shoot the
Yeah,
S with
that's
them.
another way.
Yeah. Just because like
I was
what
gonna
problems
suggest
they're
that too.
having and some tips and tricks and things like that. So, and I've done it by looking at their listings and finding out who they are and sort of backwards. And sometimes sometimes they won't talk to you. They're like, I don't want to deal with you. But, I'd say about have to. It's a good way to do it too.
Or you can see who is your neighbors, who are your neighboring properties that have multifamily properties or even single family properties that are landlords. And you can look up through True People Search and stuff like that and contact them. Say, hey, neighbor, I just bought this property here down the street from you. I just, wanted to say hi, get to meet you. I'm kind of relatively new to the area. Just wanted to, get to understand who you are, what you're doing. And some of them will be pretty open to you. They're like, oh yeah, I've been in this market for 10 years, or I've been here since 30 years ago, and it's just, this area's changed a lot, and they're like, they'll start telling you stuff about, what to look for in terms of the area, how to deal with some of the city municipality issues and stuff like that too. They could
It's
be really useful.
It's funny you mentioned that because I was one of my back out strategies is arbitraging for a sober living. So let's say this co-living doesn't work out and I have 2 or 3 different back out plans. And one of them was sober living, leasing it out to a sober living operator, if you will, for like 3 years. And I was doing some research on this and I know a guy and I was talking to him and he's like, oh yeah, man, give me the address and I'll put you in touch with so-and-so. And I gave him the address to my first house that I bought. And he's like, are you kidding me? I'm like, no. And he goes, dude, I'm your neighbor. Like he owns the house right next door. And I know he wasn't full of it because when I was working on the house, a package got delivered to the house that wasn't mine. It was a bunch of amber rocks or whatever. So I took it
Yeah.
next door and it's 6 people live there. They're like in their 70s, older ladies. They're all sober living ladies. And I got trapped in the house. I couldn't get out. She goes, oh, bring it in. It was a heavy box. I thought, okay, whatever. So I brought it in and they all came out and surrounded me and I couldn't leave. But anyway, so I knew it was some kind of living house. And it turns out the guy I've been talking to for a long time, it was his house. So anyway, small world.
Well, that's cool. I know who to talk to if I need to talk to an operator for sober living. I thought about having that as an exit plan too for some of the properties.
Yeah, Oxford House was the company that he uses, and he's got like 6 of them. And he loves them because what they do is that you sign a 3-year lease. They handle all the operations, everything. If something breaks over $100, you're on the hook for that. But it's fire and forget basically, and they pay 25% over LTR in the area average rents. So it's a pretty decent play.
And that's usually pretty I mean, because they work with state agencies, so that's guaranteed rent.
Yeah, and they went all the way to the Supreme Court, by the way, and won. So good luck. I have a friend of mine, another host that's doing co-living, and 2 doors down just happens to have a real estate attorney. So talk about unlucky. And so he's been fighting this guy for 6 months. He had construction done. He came and snooped on his house. And so this is why I know Mesa has up to 5 non-family member residents because he built an 8-bedroom, 3-bath house. And now he's only running it with 5 bedrooms. It still pays for itself, so he's okay. But this real estate attorney and him got into it. And so he's got him restricted down to 5 because that's what the county says. So I was joking and I said, you should run this as a sober living house. There's nothing he can do about it because it's a protected class. And that would really piss the guy off. And now he's thinking about doing it. So
that's smart play.
Yeah. It's like, oh, you want to mess around? Okay. And then I was also joking. Well, anyway, I'll shut go.
I just said that's Oxford House?
Oxford House, yeah. They're one of the ones.
Are they a national company or are they a region?
I think so. I know they're in other states. I don't know if they're national, but I know they're in other states and they're a big player.
Okay. I'll have to check that out. Thanks, Jared.
Yeah. The one thing I'll say though is you have to have like you can't 100% make it all bedrooms. You have to have their strategy involves a lot of communication and sit down. So you have to have kitchens and all that and bathrooms and all that to suffice, but also a living area like couches and a big space for people to sit around and talk. So you can't like
they have to do like a meetings on a week
Yeah.
or daily basis. So yeah.
Yeah. So just keep that in mind.
They have counselors that come in there
Yeah.
because they're going through rehab basically.
Yep. But they have a really high success rate if anybody's interested, because it's a year long. It's not a 1 month, 3 month, or whatever the normal is, but it's 1 year commitment. And there's very strict rules, and if you break the rules, you're out.
Yeah, that's what I heard as well.
Yeah.
So there was a church in my area locally that was up for lease that I was thinking about maybe converting because it's down the road from 3 rehab facilities. So I was like, oh, and there's one that's next to my daughter's gymnastics building that's like two buildings down, but it's a fairly good sized building.
Yeah.
And so there's a big need for it, especially, and you know how it is being in the West Coast city areas. There's a lot of opioid issues, and so I think it's a market to get into because the problem's not getting any better. So
right.
That's my opinion. So
yeah, it's a decent, solid return play. I mean, strictly financial, and time. You know, have to a lot of like with what I'm doing, it's more of a return. But as Lumberjack would say, it's your bullshit to income ratio. And the bullshit ratio is pretty high in what I'm doing. But that type of a play, you get a decent return, obviously pay for the house, and a 3-year lease. It's good and bad depending on how you look at it, and you don't have to do a lot other than maintenance. So I think it's a good solid play for certain people. Good backup plan for me.
Yeah, that's awesome, Jared. Let's stay in touch. I want to talk some more about that.
All right. Anybody been dying to jump in here?
Hey, Jared, quick question for you. So you're using Turbo Tenant to lease your...
I haven't actively been using it lately because we've been 100%. Well, we'll have one. I had to ask this lady's crazy, man. She's freaking loco. I had to ask her to leave. She moves out on the 17th. What is it? Tomorrow. But I did back when all that supply was online, because what Pad Split, for people that are listening that are interested in Pad Split, they change their fee structure, so I wouldn't do it, but that's just me. But back when I was using Pad Split, what they'll do is they'll lease up, they'll get your rentals up to 80%, and then basically stop and then move on to the other houses that are zero, that are coming online. So if the way that the rent by room strategy works is it's not a linear profit margin. It's very much pay for the mortgage, pay for utilities, right? Break even. And then everything else is just profit. So for, those other bedrooms after your mortgage and utilities, those are gold. So if you get to 80%, yeah, you're a little bit profitable, but all your profits in that 20% that they weren't working on. So I had to do something, which I was also happy for. Every time something bad happens, it ultimately ends up being a good thing, right? Because it forced me to say, oh crap, I need to do my own marketing. So which I did. And that's what it worked for me, was Turbo Tenant. And all the members I got came from apartments.com. And I've mentioned this before. It's really weird because apartments.com doesn't do rent by room, but I cheated. I put a 1-bedroom, 1-bath, and I listed it for 200, which got the eyeballs because people are like, 200, that doesn't make any sense because everything else is by month. So it caused a lot of eyeballs to look at it. And even though, it's in the description, rent by room, shared area, common areas, blah, 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 people don't read at all. Like 99% of people don't read it. And so the first question I have is, what is this? And so I had that little form letter with a QR code and the whole 9 that I would just simply reply to on Turbo Tenant. And like I said, I got about a 4% conversion ratio, which I know is low, but if you look at it from a time commitment, I spent some time drafting up the sales pitch, or the what it is, the property and all that up front. Okay, whatever, half hour. And by the way, I went through Chat GPT and cleaned it up. It's way better.
Oh, dude, that thing's awesome.
Yeah, I just made it sound so fluffy and nice. I'm like, wow. And I'd use that to then go update all my other ones. But I did all that and put it out there, and the time commitment was minimal. Like, I'm just talking about simple reply and copy and paste. So it wasn't a lot of time. So that 4% conversion, not bad in my book.
No, 4% marketing, that statistically, that is an excellent.
Oh, really?
Yes, absolutely.
Oh, wow.
For sure.
Huh. Yeah, okay, well then.
Good on you.
Okay, well, good. I thought that was really, really bad. Like, single-digit percentage sounds horrible, but from a time commitment standpoint, it was simple. And that's why I like Turbo Tenant, because Robert still on? Yeah, Robert's still on. So Robert, Turbo Tenant didn't lock me into their platform. what they did was when the people were interested, they just sent me an email, and if you just reply to that, it goes right to the potential candidate or the potential renter. It doesn't go, it doesn't force you to go through Turbo Tenant or any of that stuff, which I thought was fantastic. So, Turbo Tenant's free for 30 days too, and per property. So I did one property, another property, another property. So I mean, it was pretty cool.
You're really dialing in this is,
Right.
work.
Wait, me? You're talking about me?
Oh, I just had mentioned what was it? Turbo Tenant. Turbo Tenant, yeah.
I'm trying to roll my mind back to what I said before. What was I talking about that led to Turbo Tenant?
I just was just saying that I liked it also, and I don't use it now because I don't need to, but it's definitely there in my back pocket. If well, actually, I'll probably
I don't use Turbo Tenant.
Okay, somebody mentioned it earlier.
Do you know how much you were spending on the marketing through Turbo Tenant?
$0. It was.
So they don't charge you, and it populates onto apartments.com.
They do, but I used the 30-day. There was a time when everything went.
Was it a trial period?
Yeah, there was so much supply coming online, and so I wanted to pilot it. So I did. I put one property on there and piloted it, and then it was great. And so after that one filled up, and it took me, a couple, 2-3 weeks or whatever, then I rolled another property on it and did that one too. So I guess I used it for about 3 months, and it was fantastic.
Yeah, because right now with Rent Ready, we're paying $12.25 a week for them to basically market our unit, and it basically populates it to realtor.com, apartments.com, and like 7 other like vendors out there that list the properties. I honestly looking at it, this is my aspect, and you can take it for what it's worth. It's like I'd almost rather not pay the $12.25 per week for that, because like even it doesn't populate onto those other platforms very accurately, some of the information. So you have to go in and check it to make sure that everything's being uploaded onto those other platforms to market your property. To me, apartments.com is one of the biggest ones. Zillow, like you have to individually do it. I'd rather just sign up and use the free and just do it myself instead of paying the additional cost.
Yeah. I think Hemlane said they market to, 25 different things. I think Turbo Tenant's quite a few. I don't remember the total number, but it's quite a few. Apartments.com was the one that we got all the conversions from, though, just FYI, for that short period. Use it for what it's worth.
It's the biggest one out there.
Yeah. Lost you, Troy.
Leads I get come from apartments.com.
Oh, there you are. Came back.
Yeah. I'd say 90% of the leads that I get come from apartments.com.
Yeah. It seems to be really good for the rent by room, at least in the Arizona market. Zillow has rent by room. They turned it on like 4 or 5 months ago, but not a lot is on there. I think it was for those listening, Roomster. Crap. I don't remember what it was, but one of the other ones had more of the listings. I do that to look. I look at Furnish Finder, Roomies. The interface for Roomies sucks. Roomster, Zumper, all those different things I looked at, and the one I think it was Roomies was the one that had the most listings. I don't know what that means. It just, for me, it's a data point that says, hey, there's a lot of listings here. Maybe it's working. And I'm gonna try to watch it over time to see which ones fall off the map.
Hey, Jared, I'm not sure how well you can hear me right now. Can you hear me?
I can hear you. It just says your bandwidth is low, but I can hear you.
Yeah. Hey, have you thought about looking into building a website to manage your property? You're getting to the point where you're getting to be big enough to where like that might be an asset for you, to where it has everything. You can still like market on those platforms, but it has it directly to your website to where you can have people fill out the information on your website and it generates all that information for you. And build out like a system for yourself.
Yeah, probably not now, probably not ever. I'll probably leverage third party for everything, because I mean maybe I'll put a website together just to say, hey, that's what I'm doing, but No, I haven't. I've only got three, well now four properties, so we're 32 units is what it'll be.
I was just thinking in terms of like that way you're stepping away from pad split. You know what I mean?
Oh yeah.
To where you're not reliant on that platform. Or you another, creating your own system that generates all that. Or
Yeah. Yeah, there's a one little
I'm not sure what you have in mind.
Yeah. I've used
To separate from that.
Yeah, we'll see how it goes. I'm gonna try the hem lane thing and see how that goes, and some others with this little pilot thing. And then when my lease comes up, I renewed the lease with Pad Split on two of the properties. The third one I haven't yet, but I will. I don't, Pad Split's got to make money. Not knocking them, but I'm just saying if you buy a new property, it doesn't make any sense. The existing property is no problem, and actually it's not that bad of a deal for what they did. For people listening, they for every new member on the new fee structure, they take the first 10 days and your percentage changes from a 15% to an 8%, which sounds good. But if you do the math on that, if you've got a lot of turnover, it can take you 8 months to recover the cost if you just had the static 15%. So it's a pretty dynamic, it's a pretty big hit. But for the existing properties, if I lose one room member, I've already signed the new lease with two of them and it's already happened once. So I lost that member. They moved on. Essentially, the way I treat it is like a 10-day vacancy. So they're taking that first 10 days of that, but then it's 8%. So if that member stays a long time, it's great. But the bigger picture here is all my houses are 8 bedrooms. So those 8 bedrooms, the old ones are the static lease. The new one is the new 8%. It's not that big of a hit. Whereas if I buy a new property, spend all the time, energy, money, blah, 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 and I bring this thing online, I'm going to take a bath for 6 months with all the turnover you have in the beginning. Because for those that don't do rent by room, in the beginning is so-and-so's moving into town, so they want to come stay with you for a couple months until they find their permanent place. A lot of turnover in the beginning. And over time, you start to get those longer term members, and then it works out. It just takes time. Stabilizing a co-living property doesn't exist, to a point, right?
How much involvement do you have on that on a day-to-day basis?
So you have to consider the source here. Most people will tell you quite a bit. I have mitigated that as much as I possibly can. I probably have, I'd say 4 or 5 times a month, I'm dealing with something, right? Which isn't bad. I mean, it sounds a lot for a long-term rental. That sounds insane. I get it. But relative to other people who are dealing with 10 to 15 things a month, it's not bad. And the reason why is pain is a really good teacher. I mentioned this before. I'm kind of sucking up the co-living thing here, but in the past, I thought I was vetting members well. I was wrong. And then I got burned, and I thought I'd stepped it up a notch and pretty thorough with things and vetting members and all that. I thought, yeah, this is way better. I was wrong again. So it's been a learning process. I had one member come in I think it was September of last year, and I'd lost a total 4 members in a single house because of this one bad apple can spoil a whole bunch. So it's really good because you have individual rooms, you have separate income streams, really, really good. But it's really, really bad because if you have a bad member come in, it could tank the whole damn thing. And so this one particular person came in, and I noticed 2 people had left almost immediately, which was weird because they were what I consider long-term members, and they wanted to stay a long time. It's just this guy he messed it all up. So you got to be really, really bad to not cash flow on a co-living property. And I did not cash flow that month. I was like negative 400 because of that one person. Anyway, again, the things that are bad that are happened, I think these bad things like negative stuff is really, really good because it's taught, pain is a good teacher. And so I've stepped up my vetting process. And when I when I vet members, I used to be about like 10 to 15% would not take it. Now it's gone way up. I don't know what the ratio is, but I know the last on both ends, either they walk away or I don't allow them in. So the conversion rate's gone way down for all the members I got because they just don't fit the criteria. I've added some rules, and I reiterate the cleanliness piece way more. I used to just go through it, right, and say, hey, this is what we do, blah, blah, blah. Are you cool with that? Yay. It wasn't that bad, but essentially I'm for dramatizing it for effect. Now I go through and really harp on it. And the first thing I say is, look, this is a shared living property. This doesn't work unless you enable it. You have to enable this to work. So it's work. So you have to be clean. The common areas have to stay clean, bathrooms, kitchens, laundry room. And I go through all that stuff. Like, hey, if you're doing laundry, you need to be attentive to it. You can't just put your laundry and walk away. And I go through all this stuff, and it sounds harsh, but it scares people off, and I'm happy for it, because that way, like you hit on something right there. I have a full-time job. I don't have time for that crap, right? And so if something happens, it's usually pretty big. And so for me, it's a little different than most, because people aren't going to call me with dumb shit. You know what I mean? They're just not, because and then they've been pretty good on the houses. I just walked through them all. My cleaning lady is my little spy. My handyman's my spy. They tell me what's going on real time. It's awesome. And then I was just there, and I'm super happy. All the houses were really clean. I actually had nothing to nitpick, so I was really, really happy about it.
Yeah, I
Hey,
remember. Okay.
oh, go ahead, Gina.
Oh no, I was just going to chime in on my one time I had a tenant, and I have property manager, but my first rental, I had the lesson learning too, where I walked through the contract line by pretty much, section by section, and they initialed, and we had our house rules as well. And we discussed things like my husband made up his rules: no grease down the sink. You wipe it on a paper towel and throw it in the garbage, off your pan, for example. It was like, hey, this is the agreement. And when we would explain and say, okay, heads nod, and I was talking to two very qualified professional people. I felt kind of like a dope, but it was like, you know what? You have to like look them in the eye and, get that agreement. And it's like, okay, we've had this conversation about, whatever thing of responsibility that you think is common sense that is like not so common, or it might be unique, and just point things out.
You guys know Casey from Brick by Brick?
Yeah.
And her husband Blake. So when we were down at ORAT, we ended up hanging out.
I love Casey.
Yeah,
they're awesome.
Yeah, we were in Vegas, and boy howdy, man, they could drink. I couldn't. My wife and I were hanging out with them all night till like 2 a.m, and finally we're like, "Hey, man, we got to go to bed." But one of the things she said, I think she said it in a video, like the next day, she said, because we were talking about, like Casey and I were talking just about the real estate stuff, because Blake, he doesn't really care about it, man. He's just, and my wife, she didn't really care about it either. But I was trying to extract information from her, sorry, but and she told me, look, you got to just take your heart out, throw it on the ground, and stomp on it. And that's how you have to go about it. So when I think she said it in like a video, like the following day, and I'm not that bad, but kind of, you sort of have to be pretty stern, and I agree with you, Gina. Like, I'm talking to nurses and insurance agents, and firefighter, or just some different people in professional things, and I feel bad, but if I don't do it, it's going to burn you later.
Exactly. Yeah.
Do you feel like you've built up calluses for that, Jared?
You know what? I have. And the reason why is, when you lose 5 members in 1 month and you're paying out of pocket for a portion of the mortgage, yeah, I got some calluses there, because that was not part of the plan. I mean, I'm set up for it. I've got cash reserves and all that, but it's not fun, especially because I'll tell you what happened. The first 2, like the first one, I didn't know what I didn't know. That kind of burned me a little bit. Second one, didn't know what I didn't know, burned me a little bit. By the third one, I knew better. Here's why it happened. I had just brought on 2 other properties, and I just got them leased up to 100% or whatever. And I had 23 units. I have 24 units total, but I was at 23. He was the 24th. So I could get 100% on all 3 properties. And I was kind of like, I don't know, man. I was happy. And I was like, yeah, this guy will work. He said he's clean and this and that. But something told me, one of the things he said, it was such a red flag, and I'm such a dumbass. He said, "Oh, you're not going to get any problems from me," and he said it in such a way, and one of those things, and I, looking back on it, I'm like, what a dumbass. But I
Well, if I were to have some problems, what would they be?
Yeah. I think what I saw was 100% vacancy on 3 properties was in my head. And so, boy, howdy, did that. What a dumbass. Like, so don't do what I did.
I love your humility. That's awesome.
It's also another reason this works well in Arizona, because the eviction, I hadn't had to do one yet, but it's pretty quick. Right? I couldn't do this in Oregon. I'd have to pay for like a year or whatever. And I think people know that too. And I had to ask this lady to leave. She's been with me for about 4 months, and she's she right out of the gate caused a couple problems, but it was in the first week. And I said, hey, look, we can't do this, blah, blah, blah. And she's been fine. And then in the last, I don't know what happened last week, she just kind of came off the rails. And I said, hey, look, I got to ask you to leave. And she's like, well, I love this place. I'm like, I know you do, but it doesn't love you. And you're not a good fit. You know, you can transfer somewhere else. One good thing about the pad split platform is it's easier to say, hey, look, just transfer somewhere else, you know, and I've done this and I kind of hate this a little bit. I said, look, I'm not going to rate anything bad or whatever. Just transfer somewhere else. And, you know, you have good ratings and you say nice things. I'll say nice things. We separate ways, you know, that kind of thing. So.
Interesting. Yeah. That's really cool. You're no longer a member.
Good. All right. What else we got?
Somebody put a question, Jason put a question about the new fee structure, I guess pad split. I think you explained that. It sounds like. Yeah,
they used to be the old legacy way. I still have one property under the legacy, which is it's 12% off the gross rents, but then they charge a 2.75 for every member every month. So you can just basically call it 15% static off the gross is what they take. They do the member acquisition, they do the vetting supposedly and the background checks, you know, supposedly. You got to probably do a little bit of your own work there, but anyway, they do the member acquisition and they have the software and they do the rent collection, and if it's week by week, you know, that's pretty intense. So I'm glad that they do that. But for all that, they used to have basically 15% charge off the gross. Moving forward, as of May 1st 2024, they switched the fee structure for any new leases. I was able to get one or two retroed back because of I worked with the EA there. But anyway, any new leases, it's 8% off the gross, but
the 10 days
for every new member, they take 100% of that 10 days. And that's
it's a lease up fee. Is that right? A lease up fee, basically?
I don't know if you call it a lease up fee, but they charge you that. But there's they just take 100% of that 10 days. And that's huge. Like if you sit down and do the math, and they'll tell you the same thing, it's 8 months. So you won't break even until 8 months on that. So
yeah, well, how do they think that, you know, people aren't gonna like, well, let's just move forward. What's the competing system then? What's a competing vendor?
Nobody's close to pad split. There's a couple others out there, but I don't think they're close in numbers because, you know, Mark Cuban invested in pad split, which is why if you look at the time on this, I think it was February. Everybody was excited because Mark Cuban's invested in pad split. Yay. And then guess what? May, the fee structure changed. Why? My guess, they got to pay that guy some returns. Shocker, right? So that's part of it. They're a $200 million a year company, and up until 2024, they were investing everything back into the company, which is all what we're doing. We're taking most of us anyway. We're taking our profits, putting it into the next property, and so on. They're doing the same thing, but they took on investors. Their marketing costs, the investor payouts, all that increased, so they had to do something. And I'm not knocking them. It's you got to do what you got to do. But all of that comes at a cost. And I think what they didn't realize, something they totally, I think, talking to Atticus a couple of times, completely missed. Their mindset. I don't know if they encompass this, but like for me, I'm just me. I'm out there investing my own money. But a lot of people are out there raising capital to do this. And if you're out there talking to investors saying, hey, Mr. Investor, here's your expected returns. Oh, wait a minute. We have this 10-day variable. What do we do? So as a result, that's why I think a lot of at least in the Arizona market, Atlanta too, I saw it dropped way down. The unit count dropped way down because I think a lot of hosts stopped coming online. I actually know a guy who actually he took all of his 5 properties in Arizona, and I think he sold them off or substitute them out or whatever he did, moved to Austin because that's where, or went to Austin, and he's doing co-living there. I think he's got 8 properties there and he's running them all himself. So he pulled out a pad split 100% because of that change. That's what he told me. So I got to believe there's more and more people doing that. And I'm happy now. I was upset at the time because I was going to keep doing pad split, but I'm happy because 1, it taught me, single point of failure, pad split, no good. But 2, now my properties are damn near bouncing off the rev limit at 100%. So because there's no supply. So that's another reason I'm pretty damn happy.
Oh, I see. Because the other supply went away. So now you've got that 100%.
Yeah. There, like I said, there was about 100 and over 100, 130, 140 units in the entire valley. We're talking, what, 5 million people in that area. So on PadSplit's platform for the longest time, and then they changed that fee structure, and over a couple months it dropped down to 30. Like if you go look right now, I think there's 32 units in the entire valley for PadSplit. That's pretty low, right?
Well, I think they should then, it looks like, I mean, that is absolutely affecting PadSplit's bottom line. So then you would think that they may maybe rethink some of their, 5 days.
They are. Like I've talked to Atticus a few times, and he's the CEO, by the way. And they are doing things like they'll say, hey, if you go out and get your own member and you don't use our platform to do that, and they use this QR code, they'll waive that 10-day fee. So there's that. But then you got to think about, well, then why the hell am I paying them? It's kind of
counterintuitive.
Whatever. And there's other things they have in there to somewhat mitigate it, but they're not waiving that fee. I told them, look, the way to do this is to compromise and they're absolutely not going to do it. I said, look, you should have a 6-month probate period to where that way, at least the host has a potential to stabilize the property with the old fee structure, right? That would be a great compromise. They don't want to do it. So I think that's a dumb move, but hey, they're the business. I'm just some dude out there, whatever.
And so what are you doing going forward? Are you self-managing then?
I'm self-managing. Yeah. I'm going to run it myself. The only thing I don't know.
Jared,
yeah.
So Jared, are others who are taking them off, are they self-managing themselves or are there? Okay.
Yeah, there's a lot of people doing it and they like it better because people stay longer. For whatever reason, PadSplit tends to rub people the wrong way. I think it's more of a personable thing, or I don't know, human touch or whatever, because they're hiring these VAs from wherever, and so signs up with PadSplit and you're treated like a number, And if you call their support, I mean, even as a host, you call support, you're waiting on hold. It's like, this is some BS, right? Like I got a guy that's a good member, and he wanted to pay and he was behind and he couldn't do it. And I had to fight with Pat. So this is just this week. And it just so happens I was down there and I was talking to the guy in person, and he, most people tell you sob stories, but I saw the car. I mean, he had tire blowout. He's a Uber driver, So, anyways, like, yeah, man, we can make an exception here. Let's do this, because he's been great and everything. And he wanted to pay. He had the money, and PadSplit wouldn't let him do it. I had to call in, blah, 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 fight with him just to enable this guy to pay. I'm like, dude, that's one thing you should do, is take money from the member. You know what I mean? Like, makes no sense. So, yeah, I'm going to self-manage and see how it goes. And all the feedback I got from some of the other hosts, that was a dumb move on their part, because it actually opened the door for hosts that, when you have that pain point there. So it's like, oh, it's like me getting started in real estate. I would not have got here if it wouldn't have been for taxes. And I thank God for our federal and state government screwing me over and just sticking it to me with taxes, because it pissed me off to the point where I did something about it, did some research, found out, taxes, and led me to real estate. And then I didn't even know anything about cash flow and then rent appreciation, right? I was just like covering the cost of the mortgage for tax benefits. And then I learned about cash flow, and then I learned about rent and all this stuff. I was like, ooh, so it turned into this whole big deal. Same thing with that. So,
cool. I guess I lost my train of thought. So, and you're using not apartments.com, but a different site to the roommate, not the roommates, but another site to
Turbo Tenant, blast out.
Yeah. And that's how you advertise. And
I did Turbo Tenant. I did Facebook Marketplace. Everybody I talked to loves it and it worked great for them, but I suck at marketing and I tried everything, ChatGPT'd it up, pictures, blah, blah, blah. And I got a ton of interest, but not a single conversion with Facebook Marketplace. So it's definitely me. Like law of averages, you got to have someone that sucks at it. That's me. So I might even hire somebody. I don't know. I'll try this Hemlane thing, but marketing is definitely not my strong suit. So that's a weak point, right? But yeah, I was using Facebook Marketplace. I didn't try Craigslist because all the feedback I got, at least in my market, was other markets may vary. The feedback I got from other hosts that use Craigslist was this: you don't want the people that come from Craigslist. So I didn't even try it, because I just listened to many people that told me that same thing. And I was like, you know what? Good. I'm going to avoid that one. So I stuck with Facebook and Turbo Tenant, and the Turbo Tenant through apartments.com is what the main return I got was.
Mm-hmm. And then how are you processing payments? They're sending checks to you are the servicer. So,
So I was doing that to feed them to PadSplit. PadSplit collects the fees for those. moving forward, that's why I wanted to try out something like Hemlane or some other processing
Yeah.
thing, because I don't have. I mean, I could use Rent Ready, but same thing that Troy was just saying. I've heard other people say it's good, but there's some issues. Charles was on here earlier, and I think he was using that for something, and he switched to another platform also. So whatever's going on with Rent Ready, sounds like they were good at one point, but now they might have some issues, especially with some of the Hemlane's experimenting with AI and some other things like that. So I like that. There's a potential there to be better. The one thing there though is when there's a potential to be better, is also potential to have more cost.
Well, it sounds like it would simplify better, but it could be simplified since it's AI. That's what I'm thinking is probably, well, let me ask you, does the pad split charging fees, charging the something to charging the tenant fees as well? Like, are they double dipping? You know what I mean? Like, we found you this place, so we're gonna, we get something off of, you have to pay us too.
I don't know. It's a good question. I don't know what they're doing on that.
What's
I know there's
the
a
tenant experience besides, if there's any additional fees,
yeah, there's a little
mandatory rental insurance, mandatory.
yeah, there's a little fee in there. I know I've seen it on there, and it's like a 1 or 2% fee that the member pays that the host doesn't pay anymore. That 2.75%, I think, is passed on with the new fee structure to the member. So they may or may not like that.
Yeah. Yeah, they always try to gouge you out, coming and going, and
Yeah.
everybody.
All right. Some people on here have been pretty quiet. I don't know if they want to ask questions or if we're getting towards the end or whatever you guys want to do.
Well,
Actually, I do.
Oh, go ahead.
Oh, I was just going to say something that brought up earlier that just crossed my mind. What was it? What was his face who was on here earlier that was like wanted to see, was like going to see a place?
Charles.
Yes, we had a conversation about going too fast or too slow. I think something I want to say there, depends on you, depends on your financial situation, how much money you have, and how much you have in reserves of what's too fast or too slow. Just just for everyone here, and especially because we had that conversation, you can go fast if you have like $5 million sitting in the bank and still like go out and buy $4 million worth of property and still have $1 million worth of reserves. You can go very fast, but if you have nothing, if you buy $1 million worth of property, 100% leverage, in zero, yeah, it's probably going to bite you in the ass. So I mean, one of the things I wanted to ask him is like how much you have in reserves, and I think that's really the key to how fast or slow you can go.
He's got quite a bit. He's not he's good, but I just still you don't want to waste money. And he's also got he's got property management experience. His family's been in rentals for a long time, so he's got a lot of prior history there. But
he's probably fine, man. I mean, I don't know if he has reserves and he has experience. He's probably fine. He probably knows what he's doing. He's probably not going too fast.
Yeah, it's just he bought a lot of property real fast. And I just, even if you have some of the experience, he's buying different types of strategy properties too. So if you buy a long-term rental here, buy a duplex and short-term rental, and he's doing different things all at once. So I just you know what I mean? Like there's a whole bunch of variables.
I didn't know
there.
the context.
Yeah, so there's a whole bunch of variables there. And I was like, hey man, I just feel like I'm compelled to say this. All these things we do, we talk and meet up. Everybody's an adult. You taking bits and pieces of what you want to take. Like I disagree with half the stuff Dion says, but I like listening to certain things that he does. Like I'm doing cost segs, I'm doing LLCs, and he doesn't agree with any of that, right? And I know Zuber says some stuff. Pace Morby has his own thing. So I just pull out pieces of what I want to use. Knowledge is power, so you take what applies to you. So I just figured I'd throw it out there just so he had it in his mind at least.
No, right. No, if he's like trying to do like short term, if he's like trying to do short term rentals, and then I'm going to, well, especially if one of the areas he's investing in, he has zero experience, and that's that's a different story.
Yeah, he lives where he's
But
investing, so he knows the market really, really well. So that's a bonus.
yeah, right. All right. So then I think the takeaway from this is don't do, and this is what Matt has called me out on a million of times. Don't do a million different things at once. You're going to get got. I mean, if you can handle the load of adding properties because you know what you're doing, then fine. But if you're like, oh, like I'm going to buy 10 long-term rentals and then I'm going to buy 2 short-term rentals and I have no freaking clue what I'm doing. And then, oh, I have no money left after I buy them. Yeah, you're probably going to get shot in the foot.
Yeah, I think a lot of it goes back to your goals, right? Like where you're
Yeah.
trying to get to. Now, I'm going to say this just for context. I know a person that bought a house co-living, and I believe she bought it just for the social part, which is weird. So most of us here are here for economic goals. But there are some people out there that are buying properties for different reasons. Some people just straight up tax benefit, right? They don't care as long as the property breaks even. So it really kind of applies to your goals. And we all know and love Frank. Frank's awesome, right? He's looking for turnkey, but he's like 50,000 markets, right? Like that's not something I would do just because my background is IT and I'm all about economies of scale. So that's why I'm focused. Fixate on one course until successful. Arizona, co-living strategy. I'm not going to deviate from that, right? That's just what I'm doing because I like the economies of scale and also trying to become what they call an SME or subject matter expert in that strategy. So, and I think for me, it's a multifaceted strategy and one that, hey, that's what I'm doing for income and all that. But it's also, that's hopefully what over time I'll be known for. And my third house that I got, it came to me. I wasn't even looking for it. So that is because I was focused on that one strategy, which is a niche market. Don't get me wrong. And so when you have that niche, if you're really good in that niche, potentially anyway, things can come your way or you get known for that type of thing. And so that's my hope, my long-term benefit potential bonus plus there, if you will.
Well, I needed that conversation for sure. I was thinking about that jack of all trades, master of none. And I definitely get shiny object syndrome myself. So
Well, I do too. But I've had multiple conversations about Matt with this, and then I basically learned to stay in a lane, and my lane happens to be I'm going to follow his lane where in the future, just because of my specific market where MLS doesn't work in my market, is I'm going to be doing gen with off-market deals, and I'm specifically going to be targeting things that can either be added to bedrooms or more hopefully add units to by like finding like a duplex that's like 4 bedrooms on each side, but is in like triplex zoning. So instead of having a duplex with like 4 beds, 1 bath each, have like a 3-2-2 triplex and make more money that way.
just start and then just maximize it. And
well, I've already started. I've gotten my first off-market deal where I'm attempting to do that right now. So time to start. See how this goes.
How did you come to this? This is the path for you, or how this is where you're going to target this is your subject.
Because I've spent a lot of time hanging around that, and we are both in New Hampshire where relatively the same strategies work. So it's working for him. I've taken his boot camp. This is my 4th time taking it. So at this point, I've delved enough into his methods enough where I think I've got it down and I'm ready to go.
Yeah.
Do you pay for that boot camp every time, or you just keep taking it?
Yeah, I pay for it every time.
Drill it in.
And every time it's worth it.
Yeah, $1,000. I would take it.
You
I
never
don't
know.
have the time.
Especially think about it this way. Last boot camp, Matt went over in particular like the process about how he got his zoning variance, which I'm attempting right now.
Yeah.
He went into like a 2-hour long detail about how he did it. Now, so I paid $1,000 for this, and among other things.
Yeah. That's
Now,
worth it right
if
there.
if this works for me, I'm gaining what? Over $100,000 in equity and an extra $2,000 in rents.
Yeah.
Is that $1,000 worth it?
Yes.
Oh yeah.
Yeah.
So that's why I pay that much.
Yeah. I was just curious because I'm gonna try to. He said he's gonna do another one in September, and I'm gonna try like hell to make that work.
Yeah. Oh yeah, get into it. Definitely do it.
Yeah. I know the money's worth. $1,000 isn't the problem. The problem for me is time.
It's tough because, well, basically the way it's working right now is the only time he ever does them is on Saturday nights because that's what works for him. So, and usually works for everyone else. So, and yeah, I mean, we start at like 8 p.m. Eastern time and we go to sometimes 11 p.m., sometimes midnight. So, yeah, it's a lot.
Cool.
But definitely worth it.
What is going on with this Da Vinci thing?
Oh, somebody had asked if what editing tools for YouTube, and DaVinci Resolve. I've tried a lot of them. DaVinci Resolve is free, and I believe, or at least my take on it is, I had Adobe Premiere Photos well, I forgot what it was now. That's a paid for video editor, and DaVinci Resolve is better in my opinion, and it's free. It's awesome.
Awesome. You know why this? Because sometimes people will pop in links, in different kind of chats and this, and it could be a malware. And that suddenly when I just clicked on it, I'm like, that's why I'm like, oh, I'm so dumb. I click on something. I don't know why I'm clicking on it. And I could be dropping malware, even though we're a school community. I just was like, note to self, don't just click on random links people pop into Zoom chat. So
yeah, that's smart.
Sorry.
Last
Been
Tuesday.
on you, Lindsay. I just wasn't sure what it was.
Yeah, last Tuesday, I was at the I jumped on the Wi-Fi at the airport. I wasn't doing any banking or anything like that, but I was just checking email. And from that, I don't know how it happened, but I don't have VPN or any protection on my Android device. But anyway, it sent out email. It took the image that I was looking at in one of my emails. It took that and turned it into like a PDF. I don't know because I didn't click at it. I just heard people tell me, like Brandon Potts is on here. He's not too happy with me because it blasted out to everybody. And it wasn't like it was a email worm. I think it's collecting email addresses. So it's not like super duper harmful, but still it pissed a lot of people off. And it blasted it out. And if you clicked on it, it went and contacted all your contacts and blasted it out. So Brandon, because it came from me, he's like, oh, let me see what Jared wants. And he clicked on it. He's like, oh shit. So I'm now looking into, Robert, maybe if you got any advice on protection software for both Android and my PC. I was looking at different products out there. I haven't delved too far into it.
My answer to that is good luck, because every time, basically it's a game of, how to put this, by the time there's a software update, the hackers have already found a way around it.
But at least it's something baseline, right? You're not just
it's something. Yes, it's something baseline. You're not wide open. I mean, basically, my company just puts me through rigorous training on how to spot like bad emails. So, like, I'm just professionally trained to like not open emails. So I'm just good at it.
Yeah, no, I normally am too. I didn't actually click on anything. I don't know how it happened, to be honest. I'm pretty IT self-aware, IT manager, blah blah blah. So I don't do any banking, public Wi-Fi, or open up emails. I don't know how.
Are you sure it was from your? Are you sure it was from your email that the person got it, or did someone like
it came
your
from
email?
Yeah, it came from my email. Fortunately, I separate out my personal and business email. So it went out to all the real estate people.
Well,
So
was it really your email, or did it just look very similar to your email to fool someone?
it was. It came from. I went and Brandon shared me what he had got from me and showed me. So it was my email. So
Because I know what you can do is you can make it look like it's coming from your mail, but if you look at the underlying email address in depth, it's like, oh wait, this is someone else.
yeah,
It's a,
I was
so
looking.
that's another thing I checked for.
Yeah, I was looking at Bitdefender. It's not the top, but Tom's Hardware said it was good bang for the buck and pretty decent, and it covers multiple PC platform, Android platform, that kind of thing. So I was thinking about all in one.
So one of the things I definitely do at airports, which never and you're talking about Android specifically, make sure your device is completely locked. So what I mean by that is well, two things. Either A, make sure your device is completely locked, or B, never, ever, ever, ever plug into a USB charger at an airport. Ever. Or make sure if you are, you're using you're using a dead cable, a dead USB cable, which is electricity only,
Non-data,
not an actual
yeah.
USB, non-data cable. I know that's a great way people get got by having you have to make sure your device is completely locked out, or else you're connecting and you're going to get caught.
Yeah. For those that don't know, a lot of gas stations that take credit cards, there's an overlay. So when you put your card in there, they're taking your information. There's things like that. The USB ports that Robert's talking about is they're data mining or capturing or whatever. So I bring a charger with a USB plug. I know that a lot of the airports have USB, hotels, same thing. But I use the actual 110 plug-in and charge my phone that way for two reasons. One, it charges faster, and two, I don't have to worry about getting got.
So don't use their wire, is what you're saying.
Don't use the actual USB outlet, because there's also covers that get charged that can side load. There's all kinds of crap out there, man. It's a dirty world.
Wow, I actually didn't think about that. That's smart. I've been using a battery pack when I'm traveling, but that's smart. I could easily see, because they show people that will mock up like a ATM machine or a gas station machine where they actually build like a panel that goes right over the top of people, just insert their card and it just takes all that information.
Yeah, that's big. It's crazy. They showed how there was a news art or a news station that did a video. They caught one of they found a place that did that, and the guy went up to it and showed. He took a little screwdriver and he pried up the little number pad and peeled it up. It's just an overlay. So it's that simple. Someone could drive up, use the gas station, slap it on there, and guess what? That thing's sending all the information of everybody for as long as it runs, information to God knows who know where,
Funny little story. One of my college teachers, he had a friend that actually made, this is way back when they made software that would for like ATM machines that would change the numbers when you go from one person to another person, so no one could overlook and see what you're doing. Because if you go press the 1 button, it'd be 1 for you, but for the next person it might be an 8 type of thing. But and way ahead of the time. However, the family that invented this and had the patent on it and everything got way in over their head, financially speaking, and not with banks, if you get where I'm going with that, right? And so that's why we don't have it today, is because that particular family owns that patent. But really, had that family just not get in with the wrong investors and so forth, they would, we'd probably have that on all the ATMs today. Where the numbers are always changing, because it was actually pretty cheap and so forth. But they were the ones that had the patents and so forth, and they got in over their head with the wrong investors and various other family drama, which I'm not going to put on a recording. But if you want to have a beer, it is kind of funny. But anyways, yeah, I just still find it fascinating that a lot of these troubles today, a lot of these security troubles today, would have been, could have been solved by various inventions that have been invented a long time ago, but nobody can access but as of right now, nobody can access the patent because of, stupid family drama.
Oh,
You touched on something there that I would have never thought of in a million years. And I mentioned it in one of the prior syncs, but be careful if you're taking on private investor money. Make sure you know where the source of that money comes from. It should be if you're doing that, make that one of your questions. Several months ago, last year, I was at an event and in Arizona, and there's some guys that are doing a lot of they're big time, right? They're doing a lot of flips and loans and all this stuff. And they said that there's a large influx of cartel money coming in for investing. And so I had never would have thought of that. So, they said, look, one of their checks is to make sure they find out the source of the data or source of the funds, because that could be coming from a bad source. And you probably don't want to be, wrapped up into that type of situation.
Well, and Jared, here, let me further expand on that just because I work at a bank.
Hey, I can pause the recording if you want, Lars.
Yeah, go ahead.
Let me do that. Okay.